हाय गाइस, गुड आफ्टरनून। कैसे हैं आप सब? हाय प्राची, गुड आफ्टरनून। So guys, this marathon which I'm conducting for all of you guys, this marathon is going to be 100% in English. Okay. The main reason for conducting this marathon in 100% English is because of the fact that many students, especially from South India, okay, they have messaged me saying that, ki sir, is it possible to bring this session in 100% English? I have already conducted many marathons and those marathons have always been English as well as Hindi. So guys, today is going to be a bit special. Today I will be doing this marathon completely in English so that it reaches out to everybody. Okay, the speed of this marathon is going to be this exact speed which I am talking around here. It will be as I try to do it in two parts, but I feel that this marathon will stretch for three parts. Okay, that is today, tomorrow, and day after tomorrow. Got it? So therefore, I will try my level best to finish it in two parts, but I'm not sure if it gets finished because I don't want to rush in this session. I want this to be a one-stop repository for all of you guys so that you are able to see this video again and again when you get confused. Got it? Point number two is that the timestamps. Once this video, as you can see, this video is completely live. So once the video is over, after that you will get the timestamps as the first comment. Point number two, what about the notes? All of these charts which are there, once the lecture is over, after that I will be starting off. Once the lecture is over, after that I will merge all these charts and put it up on the Ekagrata telegram. Got it? So that you guys can have ready access to that. And on top of that, for tomorrow's session I will try my best if the chart is posted before the class so that you guys can download it and have a print also before the session. I hope all of this is clear to you. Hi Mamta, good evening. Hi Prachi, hi Amna. Okay, so chalo, let's start with our today's session. Guys, in today's session, I'm going to be covering few standards, but these are going to be the most important standards. ठीक है? But sir, other subjects marathons कब start होंगे? Beta, that you will come to know on YouTube only. And point number two, Basavana Goda sir, why writing? It is not stop beta. The writing practice is going to be there every day. It is just the fact that ki these 2-3 days. Okay, yesterday actually was my anniversary. Okay, that is the reason why I could not conduct the writing practice batch. And another important point is that today and tomorrow I'm taking these marathons. So that is the reason why I have kept that writing practice on hold for now. Are you clear, Basavna? Okay, so don't worry that I'm going to be continuing. Okay, chalo. Now everybody focus on the screen. Is my screen visible to everybody? Let me just check that. Okay, I'm just going to a bit left so that you guys can see the screen properly. Okay, chalo. Chalo. Let us start. Guys, I'm starting off with a very difficult standard, that is SA 705. Okay, modification to the independent auditor's report. Now, pay very careful attention to what I'm going to be speaking. The reason is that because, okay, the more you're attentive, whatever you're doing, please keep it aside. Okay, please just pay attention to what I'll be speaking. Are you clear? Okay, now, as you're aware of, guys, whenever we are going to start with audit, we should always start with what? With understanding the master chart. Okay, the students who have already attended my classes, they will very well know that what exactly is the master chart. But for students who are attending for the first time, okay, let me just show the master chart to you. Okay, yes, as you can see on the screen, I have presented the master chart. Okay, guys, remember, audit always starts with the basics, that is your SA 200 series, right? In that we see what the SA 200, that is overall objectives of the auditor. Our objective is basically to obtain reasonable assurance whether financial statements are free from material misstatement, and to express an opinion whether financials are prepared in accordance with the applicable financial reporting framework. And point number two is to express the opinion and report in accordance with the standards. That is the most important point that we see in SA 200. After that, we go to SA 210, that is agreeing to the terms of audit engagement, where we study everything about the engagement letter, right? As you're aware of, You cannot believe the client. You have to always have a proper contract with the client. Then we ensure that there is audit quality maintained by having a proper quality control system in the organization, which is told to us by SA 220 and STUC 1, right? After that, auditor has to always maintain documentation, that is SA 230, because in future, if anybody is going to raise doubts on your audit quality, then it is the documentation that's going to help you. Okay, then we study something about fraud, right? By the way, earlier in the old syllabus at the inter level, this standard was there for you totally in detail, but now this standard has been shifted to CA final. Okay, but still some basic aspects you need to know, that as auditor, okay, it is not my responsibility to find out fraud. Sir, are we going to be doing these standards as well in detail? Yes, we are. Okay, but these standards will come in between, understood? For, as I told you, today I'm going to be doing a lot of important standards, and slowly and steadily the least important ones will come later on. Okay, then we have SA 260, 265, wherein we communicate important matters with TCWG, that is those charged with governance. And after that, we have joint audit. Once we understand the basic part, after that, you are very well aware of that audit is divided into three areas, right? One is called as planning the audit. Second is performing the audit, that is performing our audit procedures. And after that, we do the reporting, that is audit reporting, right? In the planning stage, always remember what is the first thing you need to do. As an auditor, you should always try to gather knowledge of the client's business. Okay. Point number two, you need to understand the accounting system and the internal control system that is there at the client place. Okay. Now, what is the meaning of internal control system? It is that processes, it is that procedures that the organization has implemented to ensure that there is safeguarding of assets, their operations are effective and efficient, laws and regulations are being complied, and financial reporting is reliable. Okay, such system is called as internal control system. In a nutshell, it is the policies and procedures that organization implements in every department. Okay. After that, the auditor will set a materiality level for that, which will study in SA 320. Okay. Then the auditor will complete his risk assessment procedures. He will try to identify what all areas are there in the financial statements which are highly risky, where there is a chance of high misstatements, and therefore he has to implement more procedures. He has to do more checking in those areas. Then we formulate our strategy, plan and program, which we study as per SA 300, correct? Once we are very clear that how much risk is involved, based on that we will respond to the risk by performing procedures, by doing the checking, by doing the testing. So remember, these procedures are always divided into two parts. One is compliance procedures and the second is substantive procedures. Okay. Now, what is the meaning of compliance procedures? First thing that the auditor does is he will test the internal control system. He has to check if the policies and the procedures are bang on. The reason is that because imagine guys, if the systems and the procedures implemented in the organization are working effectively, okay, for example, the design of the control is very good and the operating effectiveness of the control is very good. In that situation, what will happen is that the financial reporting will be very good. Okay? So remember, if the controls are good, automatically what will happen is that your accounting also will be good, your financial reporting will be good. That's why we need to first check the control system. Point number two, once we check the control system, after that we have to ensure that we implement substantive procedures. Now remember, substantive procedure divided into two parts, that is analytical procedures and test of details. Sir, what is analytical procedures? For example, we are doing trend analysis. Last year, let's suppose last year there were 500 employees in the organization and the salary paid, that is debited in PNL, was 50 lakhs. But now in the current year, you noticed that the number of employees are only 300. The organization has laid off 200 employees and the salary debited is 1.5 crore, which is absolutely absurd, right? So how can that happen that where the number of employees has reduced, the salary figure triples? So therefore, auditor will identify that there is high risk of material misstatement in salary, and he has to ensure that he is checking more salary slips. He is checking more entries with respect to the salary figure. Okay. So you realized how analytical procedure, just by applying your brain, not even checking one salary slip, you identified that there is high risk in salary. Got it? Next point. After this, we need to implement the test of details, that is simply vouching and verification, right? Vouching as a term is used for P&L items and verification is the term used for balance items. Here we will actually check all the assertions. Okay, we are going to check all the assertions. Okay, what the client is actually trying to tell you. For example, if the client has shown that purchase is worth 10 crores. So what is the client trying to imply? The client is trying to imply that these purchases have actually occurred. The measurement of the purchase is right, means all the purchase invoices to tally to 10 crores. After that, they have covered all, so completeness assertion is there, that they have covered all the invoices. The measurement is clear. They have covered purchase only up to 31st of March and the purchase have actually occurred and the presentation also is proper. These are the 5 assertions when it comes to your P&L items. Similar assertions we have for balance sheet items also, and we need to keep gathering evidences for every assertion. Once, now that guys, we gather evidences, as you're aware of, the evidence has to be sufficient and appropriate. Okay, SAAE, that is the short form that we use. Remember, appropriateness is a measure of quality and sufficiency is a measure of quantity. Once as an auditor, we get these conclusions. Once we derive these conclusions, after that what happens? Once we get the evidences, through the evidences, we derive the conclusions. And it is this conclusion, guys, that we present in the form of an opinion in the audit report. I'm repeating once again, the trajectory is very simple. Auditor will perform procedures. Auditor will gather sufficient appropriate audit evidence. I repeat, he will try to gather. If he is able to perform the procedures, he will try to gather evidence. It is not necessary that he will be always able to perform the procedures. He may be able to perform, he may not be able to perform. Okay, based on that, he may gather evidence, he may not gather evidence. We are going by the conclusion that he has been able to gather the evidence, and based on that, all the evidences combined, he will derive conclusions. And on those conclusions, he will form his opinion that will be expressed in the form of the audit report. Now, everybody in the classroom, okay, you remember the opinion is going to be of 2 types. One is unmodified or modified. Okay, this by the way, when I'm conducting this marathon, it is not for the students who are sitting for the first time. Remember, marathons are only useful if you have done the syllabus once. Got it? Okay. Now, the opinion, as you're aware of, can be of 2 types: unmodified, modified. Unmodified means what? Unqualified opinion or clean opinion, right? And what is the sentence that we use? That financial statements are showing a true and fair view. Whereas, as you're aware of, modified opinion of 3 types: qualified, adverse, and disclaimer. Okay, qualified opinion means what? That majority financials are showing a true and fair view, barring a few things, except a few things. Adverse opinion, the language is pretty straightforward. Financial statements are not showing a true, means there are many misstatements. And disclaimer, disclaimer as an opinion, you have to provide when the auditor is unable to obtain evidence, and based on that he gathers that he will not be able to form the opinion. That's why you will give a disclaimer. Everybody who is there in the chat box, I need a confirmation from you guys. Have you understood the master chart? I'm sharing the entire screen with you. Let us go to the first standard of the day. Okay, bacho. Let us go to the first standard now. Okay, we are starting off with SA 705. Okay, what is SA 705? 705 talks about modification of the opinion. Okay, bacho. Now you are well aware of, right now only I discussed with you, I am in the reporting stage. Which stage? Reporting stage. Okay. Now, as you can see, auditor will perform his procedures. I just showed you. Auditor will perform his procedures. Based on that, बच्चों, the auditor may be able to gather sufficient appropriate audit evidence, or he may not be able to gather sufficient appropriate audit evidence. Correct? He may be able to gather evidence. He may not be able to gather evidence. Suppose, now let us take the understanding that suppose he is able to gather sufficient appropriate audit evidence. For example, there can be two outcomes out of this. Outcome number one, the sufficient appropriate audit evidence tallies with the books of accounts, or the sufficient appropriate audit evidence does not tally with the books of accounts. Okay, let us take an example to understand this. Let us suppose, as an auditor, you sent an external confirmation request, okay, and you got the answer from the debtor that the balance that he is supposed to pay is 10 lakh rupees, and in your client's books of accounts the receivable is also 10 lakh rupees. So it is very clear that both of them have tallied, because the evidence is tallying with the books of accounts disclosure. So therefore there is no misstatement. Correct? Therefore there is no misstatement. You can very well go ahead and start checking the next item. Okay. But suppose guys, the evidence does not match the books of accounts disclosure. For example, everybody in the chat box, please let me know, is the audio clear? Is the audio clear? Or you want me to hold the mic like this? Is the audio clear to everybody? Do you want me to hold the mic like this? बोलो बच्चों. Okay, chalo. Okay, perfect. Now, suppose the evidence does not match with the books of accounts. Now, in this case, what are you going to do? Let's take an example to understand. Let's suppose you called for a bank confirmation. Okay. When you called for this bank confirmation, okay, for bank balance, bank said that the bank balance as on 31st March is 50 lakhs. Okay. But the books of accounts are showing only 35 lakhs as bank balance. So clearly there is a mismatch. Now when there is a mismatch, guys, I can't ignore the mismatch. I have to ensure that I perform additional procedures. Mark the word additional procedures. I have not said alternate. Remember, when you asked for an external confirmation, you have already done one procedure. Now you are doing extra procedures. So therefore it's going to be called as additional procedure. Okay. Now, for example, what was the additional procedure that you performed? You did a bank reconciliation, and after doing a bank reco, there can be two outcomes. One outcome is that you realize that actually there is no misstatement. Why? Because on the 30th of March, your client had made payment via check, okay, of 15 lakhs. That is the reason the bank balance in the books went down by 15 lakhs, but the check was not cleared on 31st of March. So clearly this amount got tallied. Okay. So clearly this amount got tallied. So there is no misstatement. But let us suppose that you were unable to trace this 15 lakhs. It is not possible for you to trace the 15 lakhs. You tried asking the client as well, but the client also was unable to trace this 15 lakhs. It is very clear that it is a misstatement of 15 lakhs in bank balance. Now, you will not directly modify your opinion. You have to give the benefit of doubt to the client and ask them to rectify the financials. Okay. Now, once you give this request, there can be two outcomes. One is that the client agrees to rectify, correct? The client agrees to rectify, that is, he agrees to give effect to the audit adjustment. If you remember, these used to come in your 12th standard. 12th standard, in your school, college days. That time you used to get final accounts answer and you used to get audit adjustments. So client agrees to rectify. As an auditor, I will check whether they have done the rectification properly, and now I'll come to the conclusion that there is no misstatement, because the client is polite enough to accept my request and agree the and tally and revise the financials and pass the rectification entry. However, there may be some clients who will not agree to your rectification. Okay. Now in that scenario, what you should do, try and understand, you should park that misstatement aside. You will not directly jump on any conclusions. You will wait for your entire audit to get over. Okay. Now remember, once your entire audit is over, you will now start picking up those misstatements. Okay. And you will try to identify whether that misstatement individually or in aggregate, is it material or is it immaterial. Okay. As you can see on the screen, auditor will identify if the effect of this misstatement, okay, effect of this identified misstatement, is it individually or in aggregate with the other misstatement, is it material or not. Supposing guys, the misstatement, okay, the effect of the misstatement individually or aggregate, once you totaled all misstatements, still it is coming below the materiality level, okay, means clearly it is immaterial. So therefore, as an auditor, you will come to the conclusion that these are very, very minor misstatements. They are not impacting the financials. So even if the client is not rectifying them, it is fine. Okay, still you will end up giving a unmodified opinion. That is, your sentence will be financials are showing a true and fair view. Okay, bacho. But let us suppose, that the effect of the misstatement individually or in aggregate, it is material, means it is above the materiality level. Now as an auditor, you need to check if it fulfills the pervasiveness definition, if it crosses the pervasiveness threshold. Sir, what is this pervasiveness threshold? What do you mean by pervasiveness? Pay attention very carefully. Guys, what is the meaning of pervasiveness? Focus very carefully. Pervasiveness means misstatement is said to be pervasive if the effect or the impact of the misstatement is not confined to one account. Means what? It is one misstatement which is impacting multiple areas. Okay. Or the impact or the effect of the misstatement is confined to an account, but it forms a huge portion of the financials. Okay. Or it impacts a fundamental disclosure. It is so grave, the misstatement is so grave that it is impacting a fundamental disclosure. Got it? Now in this case, when if the effect of the misstatement falls in any of these three categories, I'm repeating once again, if the misstatement guys falls in any of these three categories, okay, then in that case that misstatement will have a pervasive impact. Okay. So therefore, now you need to come back to this chart and check if the misstatement is material, but it is not falling in any of the three pillars of pervasiveness. Means the impact is not in the impact is confined to one account, but it is very small portion. It is not impacting multiple accounts. It is not impacting fundamental disclosures. Means it is just a simple material misstatement, but it is not having a pervasive impact on your financials. You will end up giving which opinion? Qualified opinion. Which opinion, guys? Qualified. And what is going to be the language of the qualified opinion? It is going to be this: except for the effects of matters described in basis for qualified opinion paragraph, the financials show a true and fair view. Okay. Now at this juncture, okay, there might be many students who will get confused that, sir, what is this basis for opinion paragraph? So let me show you that. Just give me 1 minute. Hold on. Okay, yes, guys. As you can see out here, as you can see out here, this is the format of the audit report, correct? The format clearly shows at the start we have the title, right? That is the independent auditor's report. After that, we have the addressee point, that is who is this report addressed to. Usually it is the owners of the organization. Then as you can see, we have the opinion paragraph. Okay, remember, if you're giving a qualified opinion, the name will change to qualified. If it's adverse, then adverse opinion. Okay. Then we have the basis for opinion paragraph. Remember, whenever you change the opinion, let's suppose you're giving qualified, so the name will be basis for qualified opinion. Okay, adverse opinion, basis for adverse opinion. Now, what is the logic? The logic is that, remember, this opinion paragraph, guys, is nothing but the conclusion. What is it? It is the conclusion. This is the conclusion, and this is the reasons. This is the reasons for reaching that conclusion. Got it? That is as simple as that. The difference between opinion and basis for opinion. Then we have certain other paragraphs as well. For example, material uncertainty in relation to going concern para. Then we have the key audit matter para. Then we have the emphasis of matter para. Then we have the other matter paragraph. Then management responsibility para, auditor responsibility para, other information para. Then we have company auditors report order 143.3. Then signature, place, date and UDIN. That is how the audit report is designed. Okay, so remember, all of these paragraphs will come if the particular standard applies on the client. For example, if your client is a listed entity, then key audit matter para will come. If at all the client is falling into that situations which are required by SA 570, only then this particular 570 paragraph will come, or else it will not come. Okay, but there are some basic paragraphs which will always be there. For example, title, addressee, opinion, basis, right? Management responsibility, auditor responsibility, other information, 143.3 if your client is a company, Caro if your client is a company, signature, place, date, UDIN. These are some basic points that will always be there in the audit report. Okay, chalo, let's come back. I hope you're clear now.
Something went wrong. Please try again.
One second, hold on. Okay, we are back. हाँ बच्चों, I hope now you're clear what I meant about this. I was talking what I meant when I said about the basis for qualified opinion para. Okay बच्चों, now what is the language in qualified opinion? Except for effect of matters described in basis for qualified opinion para, the financials show a true and fair view. What I told you, and why is the case? Why is this the case? Because the impact of the misstatement is material, but it is not pervasive. Okay, now supposing the impact of the misstatement, guys, is material as well as pervasive, which opinion are you going to give? Adverse opinion. And what is going to be the language? Financial statements are not showing a true and fair view. Okay, here as I told you, we are going to be very clear. Okay, next point. Now with that, we are through with 50% of SA 705. Okay, now the balance 50% is left. If you notice very carefully in this part of the chart, where the auditor is able to gather sufficient appropriate audit evidence, I never used the word disclaimer of opinion, right? Why did I not use the word disclaimer on this side of the chart? If you notice, see, it's unmodified, qualified or adverse, because auditor was able to successfully perform his procedures. Auditor was able to gather the evidence. If you have the evidence, for example, think about it. Do you think so? The judge in the court, when the judge has received all the evidences, will he not be able to form an opinion? Will he not be able to provide a judgment? He will be able to. Same logic applies to us as auditors. When we are able to perform procedures, when we are able to gather evidences, then in that case, we should be in a position to form the opinion. Got it? That's the reason disclaimer word will not find place here. I hope the logic is clear. Okay. Now the next point. Let us go to the next slide, that if after performing procedures, the auditor was unable to gather evidence. Sir, can you please give some examples of this? Focus. I'm giving you one example. That example will make things ultra clear. Okay. Supposing Supposing you went for stock audit at your client place. Okay. Supposing you were going on the way, you are going for stock audit, but let's suppose there was a lockdown. There was a lockdown. Okay. And because of the lockdown, you are unable to leave your state. Let's suppose the stock audit was, you are in Maharashtra. The stock audit was supposed to be happening somewhere in Rajasthan, but because of lockdown, you could not leave your state, let alone the state. You could not leave your city. Okay, that was the main reason why you could not perform that procedure. So when you're not able to perform the stock audit procedure, automatically you are unable to gather evidence. Example number 2. Let us suppose your client's head office where they maintain the records, it is in Chennai. And as you're very well aware of, Chennai always gets flooded. Okay, and because of those floods, the accounts washed away. Or one more example, let us suppose your client was converting itself from manual accounting based to automated accounting, and in that transition phase, by mistake, the backup was lost. Okay. Now in this case, it is not the poor client's fault. Yes or no? Lockdown happening, not the client's fault. Flood coming, not the client's fault. Changes from manual to automated, not the client's fault. The entire system went down. Okay. Because see, there's therefore multiple times the auditor wants to perform procedures, but he is unable to do it because of valid reasons. Okay. Or he might not be able to perform procedures because of some invalid reasons. For example, the client is purposely trying to put some limitation on the scope of audit. Okay. So we need to understand both from both the perspectives. Perspective number 1. Okay, if it is a valid reason, what should the auditor do? Auditors will first discuss with the management. Okay. Auditor will discuss with the management that, guys, we have to take some other alternative. Please let me know how can I do the audit. Okay. You'll try to perform alternative procedures. For example, I gave you the example of stock audit. You left your house to do the stock audit, but there was a lockdown, so you could not. So in that place, in the place of going and doing the physical stock audit, what are the alternate procedures you can do? You can ask for records from the client. You can ask for records of the goods that are purchased prior to the stock audit date and sold after the stock audit date. So when you have both these invoices, purchased prior to stock audit, sold after stock audit, so it will give you an evidence about the existence and condition of the inventory. So similarly, you need to check these documentation. Okay, you need to check the inventory records. Okay, such other alternate procedures you have to do. You have to check the goods received note. You need to check the e-way bills. All of these documents you will try to check. Okay, just to get some evidence about the inventory if you are unable to do stock audit. Okay. Now, let us suppose after performing these alternate procedures also, again, you are able to gather evidence, then so it is nothing like it best. As you can see, I have said refer hashtag, and refer hashtag means what? If you are able to gather evidence, then your this side of the chart will start, right? This hashtag, that after performing alternate procedures, you are able to gather evidence. But in all probability, if you are unable to gather evidence, then what the auditor should do? Guys, then you need to discuss with those charged with governance. We very well know who is TCWG, one level above the management. Okay, these are those guys who oversee financial reporting. In the case of a company, it is the board of directors. In the case of trust, it is the trustee. In the case of partnership firm, it is the partners. Okay, so these are the top management people. Okay, CFO, CEO, all of these guys will form part of your TCWG. Go and discuss with them. Go and discuss this stuff with audit committee. Okay, and you will try to now identify, mark my words, mark my words. Now you will try to identify possible effect of undetected misstatement. Remember, both these red words, possible and undetected, both the words which I marked in red, these words were missing here. Can you see? These words were missing here. What is the word written here? Effect of this misstatement. Have I written the word possible effect? No. Have I written the word undetected? No. You will have the word that will be used here. Identify effect of this detected misstatement. What is the word that will be used here? Detected. Whereas in this slide, which is the word being used here? It is undetected misstatement. I hope that point is clear. Okay. Now, suppose this way you will have to do basis your professional judgment. Okay. Based on your judgment, auditor came to the conclusion that possible effect of undetected misstatement individually or in aggregate. Okay, if it is immaterial, you will of course give unmodified opinion. But if at all the possible effect is material but not pervasive, you will give a qualified opinion. And if it is material and pervasive, you will give a disclaimer opinion. Remember, in this part which I was teaching you, the reasons for not being able to obtain evidence were genuine reasons. Therefore, there is no need to withdraw. There is no need to resign from the engagement. You will max to max give a disclaimer. Got it? However, let's go to the last part of the standard now. With that, this standard will be over. Okay. Let us suppose, guys, let us suppose you were unable to perform the procedures because of limitations imposed by the client, because of limitations on the scope of auditor. Okay. Now, what are you going to do in this case? In this case, guys, I will request the management. First thing that I will do is request the management to remove the limitation, right? If they're not allowing you to meet with the CFO, if they're not allowing you to meet with the audit committee, ask them that this is wrong. Already as per SA 210, in the engagement letter itself and in the preliminary engagement activities, you guys had clearly stated, agreed to the understanding, to the premise of audit, that you're going to provide me with all information, additional information, and access to everybody within the organization. Okay, you can't go back now. So you request the management to remove the limitation. If they have little bit of sanity left, they will remove the limitation and they will allow you to do the procedures, right? And hopefully you can get the evidence also. But if they are trying to hide something, if the client lacks integrity, if the client has done some fraud in the financials, then guys, they will not remove the limitation, because they know that the moment they remove the limitation, as an auditor, you will identify those misstatements which have taken place because of fraud. Okay. Therefore, you're going to discuss this matter now with TCWG. Okay, discuss this matter with TCWG. After that, you try performing the alternate procedures just like we did there. Okay, you try alternate procedures, and even after performing the procedures, you may be able to gather evidence or you may not be able to gather evidence, right? If you are able to gather evidence, no problem. But if you are not able to gather evidence, now in this case, again, you will identify the possible effect of undetected misstatement. If that possible effect, guys, it is immaterial, you will give an unmodified opinion. If it is material but not pervasive, you will give a qualified opinion. And if it is material and pervasive, the first thing that you're going to do is withdraw from that engagement, because the impact of the undetected misstatement is so grave that it is going to impact the entire financials. So it's better that you withdraw from the engagement. Don't stay associated with this client, and this because in future the client's fraud will be definitely unearthed. The client's reputation will go down, goodwill will go down, and along with that, your CA firm's goodwill also will go down. For example, as you are very well aware of how Deloitte resigned from the Baiju audit, barabar na? How they resigned from the Baiju's audit. Similarly, guys, you also have to withdraw, because Deloitte was not getting any information from Baiju's. They were not able to, they were not getting any details from Baiju's. That's why they had resigned. Similarly, guys, withdraw from the engagement. But if the withdrawal, guys, is not possible, then the best alternative next is to disclaim the opinion. Now, the moment I say this, that unable to withdraw, many students have this doubts that, sir, how are we unable to withdraw? We can always resign. It is not a jail that you have to stay there. Barabar na? ठीक है? तो remember, because of many laws and regulations, guys, because of many laws and regulations, it is not possible for the auditor to withdraw at any given point of time. For example, look here. SEBI regulations state that if a practicing chartered accountant is auditing a listed entity, okay, then in that case, remember, when the practicing chartered accountant is auditing a listed entity, then in that case, if at all he has done the limited review, you remember there are many engagements, out of that review also is an engagement. If at all the auditor has done a limited review for the first 3 quarters, then SEBI regulations say that the same chartered accountant, same CA firm, has to do the 4th quarter review and the full year audit. You can't resign. You have to finish this work and only then resign. Got it? In these cases, if you believe that it is not possible for you to form an opinion, that is and withdraw from the engagement, that is where you give a disclaimer. Okay, all the students who are live, I need a confirmation from you. Have you properly understood SA 705? I have tried my level best to basically explain this standard in the most crisp manner as possible. Have you understood? Write in the chat box SA 705 done, so that we can move to the next standard. Okay, perfect. Guys, in case if you have, okay, perfect. Okay, guys, in case if you have not yet liked the video, then please hit that like button. The moment you hit the like button, guys, what happens is that uh, YouTube will understand that's a good video and it has to be shared across with other students. So please ensure that please ensure that you are liking the video so that it reaches other students as well. Okay. Chalo. On that note, perfect. Let's go to the next standard, bacho. Now, let's go to 7. We have just completed with 705. Correct. Now, after this, let us do a very small standard, that is SA 706. Okay, which is a connected standard, right? 705, 706. Let's do 706 now. That is emphasis of matter paragraph. Okay, everybody focus. Okay, everybody. Now, everybody attention on the board. We are discussing SA 706, emphasis of matter paragraph and other matter paragraph. Okay. Maximum time required is going to be 15 minutes, 1-5. Okay. Within 15 minutes, we will cover SA 706 if at all you guys are paying attention. Okay. Now, any doubt, any particular doubt that you're getting, if the speed is fast, okay, then please ensure that you type in the chat box and let me know. Okay. It's a small standard, will not take more than 15-20 minutes to cover it up. Okay. Out of emphasis of matter and other matter paragraph, which is more important from an exam perspective at the inter level, SA 706 is more important. Okay. Now, let me show emphasis of matter paragraph to you practically first. Look on the screen. Yes, guys. As you can see out here, emphasis of matter paragraph, which is a marked point. Okay. I'm reading out this sentence. By the way, this emphasis of matter paragraph is in my audit report. This is one para. Okay. And what is the language? We draw attention to note number 46 of the financial statements, which describe the adverse impact of financial performance of company on account of COVID-19 pandemic. Okay. And look at the last line. Our report is not modified in respect of this matter. Okay. So, sir, why are you showing us this audit report? The reason for showing you this audit report is multifold. Point number one is that you guys need to understand the presentation. How is emphasis of meta paragraph presented? Point number two, remember it always starts. The emphasis of meta paragraph always starts with a reference to a matter which is properly disclosed in the financial statements and which is fundamental to user understanding. Okay, so remember these 2 points. What did I say? Focus on a matter which is not misstated in the financials, so which is properly disclosed and it is fundamental to user understanding. That is where you will use a emphasis of meta paragraph. So for example, as you can see out here, in the case of this company, that is Minda Furukua. What is the name of the client? Minda Furukua. Okay, what has happened? The client was the client's financial performance was very bad. What was the main reason? COVID-19 pandemic. As you're very well aware of, because of COVID-19, many businesses suffered. Similarly, Minda Furukawa's business also suffered. Okay. So Minda Furukawa prepared its financial statements, and in the financial statements, they have given a disclosure in note 46, which is at the very fag end of the financials, right? In that very fag end, note number 46, they have given this disclosure that our financial performance was poor because of COVID-19 pandemic. Okay, they have given the disclosure properly. It is properly stated. There are no misstatements. Okay, and point number 2, auditor believes that that disclosure in note number 46 should be read by all the users of the financial statements. Okay, but now how can he read, how can he ensure that everybody goes to note number 46 and reads that disclosure? He can do it via emphasis of meta paragraph. That, as you can see on the screen, what has he done in the audit report, which is just a 4-pager report, right, where which line everybody reads. So he has specifically told everybody who is reading the audit report, we draw your attention to note 46. Please go and read for note 46, because that note is properly presented, it is not misstated, and it is fundamental to your understanding. You should read that note. Okay, and last point he is given, that our report is not modified. We are not modifying our report because of this. And how, why will I modify? When something is properly disclosed, why the hell should I modify the audit report? Okay, it is properly disclosed, boss. See, remember, if something is misstated, we just saw, if something is misstated and if it is material and pervasive, material but not pervasive, you always go through the 705 route, which we just completed, right? Either qualified, adverse, disclaimer. But when something which is not misstated and something is fundamental to your understanding, auditor will use the power of 706, emphasize a meta paragraph, and draw everybody's attention to it. I hope the logic is clear. What exactly is EOM para? Okay, chalo. Now the next point. Focus on this. Okay, look here. What I've done is, guys, in the chart, I have purposely kept EOM para and other meta paragraph just right besides each other, because many students get confused that between both of them. That's why. But first, we are going to be covering EOM, emphasize a matter. Okay, look at this. Point number 1. Okay, so point number 1. Auditor should include such paragraph when should the auditor include the EOM paragraph? He should include it when the auditor is not required to modify his opinion. If that matter is misstated, then 705 will apply. If it is not misstated, 705 will not apply. Okay, and the matter is not determined to be a key audit matter. We have not done key audit matter yet, but that is the next standard that we are going to do after this. Okay, so remember, if a matter is not misstated, point number 2, if that matter does not fulfill definition of key audit matter and it fulfills definition of emphasis of matter, then we will add it. Next point. What are the various circumstances when the emphasis of meta paragraph can be used? Focus on. हाँ बच्चों. What are the various circumstances when the emphasis of meta paragraph will be used? Point number 1, what I just showed you. A major catastrophe that has continues to have a significant effect on the financial position. The example that I just gave you of Minda Furukawa falls here, right? Because COVID-19 pandemic was a catastrophe, and that catastrophe has had and is having an impact on Minda Furukawa's financial performance. So that's why auditor has read 706. He knew that that particular note falls in this category of major catastrophe, and therefore he added it. Point number 2, uncertainty relating to future outcome of an exceptional litigation. Guys, some time ago, if you remember, there was a huge court case against Johnson and Johnson. Okay, why? Because of harmful content in their baby powder, right? They were charged with the fact that this baby powder can be cancerous. They were not doing the test properly, and Johnson and Johnson had to pay heavy fines. So therefore now it is very obvious, guys, that when that court case was filed against Johnson and Johnson, okay, they would have disclosed it. They would have disclosed that matter in their financial statement as a contingent liability. Okay, and the lawsuit was enormous. So therefore, when such a lawsuits are filed against the company, which are exceptional litigations, okay, auditor should include about that in the emphasis matter paragraph, so that people are able to go and read that contingent liability note. Okay, next point. Significant subsequent event that occurs between date of financials and date of audit report. Let's suppose there was a fire. Okay, a fire occurred after 31st of March, but before the audit report is closed. It is a subsequent event and it has an impact on the financials, right? So therefore, in this case, guys, we will add that details about the fire that took place as in the emphasis of matter paragraph. And last point, early application of a new accounting standard that has a material effect on the financial. Let's suppose your client had to apply a new accounting standard from next year, but they started applied in this year. So very obvious, they would have written a note about it in the financials that because of the approval, because of the voluntary requirement to comply with this accounting standard, we have started applying this accounting standard from this year itself. That particular note will have an impact on the financials if the auditor believes it is properly stated. If the auditor believes it is fundamental to user disclosure, the user understanding, then he will add that note as well in the EOM paragraph. Okay, and guys, the manner of presentation is very simple. I showed you through the actual audit report itself, right? You have to use it and you have to put the paragraph under a heading emphasize a matter. You include in the paragraph that matter has been emphasized, and to where relevant disclosures, the paragraph shall refer only to information in the financial statements. Means what? We write the sentence now, we refer to note number 46 of financial statements. We can't say we refer to note 20 of board of directors report. We refer to note 20 of company secretary report. We can't refer to any document other than financial statements. And last, you have to use this line, our report, our opinion is not modified in respect of this matter. That last line you have to use. Okay, what is the scope of 706? The scope is very simple. Modified opinion in accordance with, pay attention, emphasis of matter paragraph is not. Remember, when you add something in the EOM paragraph, it is not a substitute to modified opinion. It is not a substitute to the disclosures that are required. Disclosures that are required to be inserted by the client in the financial statements, and it is not a substitute for reporting as per 570. All of those are separate. If at all my disclosure of 570 is required, you have to give that. The reason I give EOM paragraph ka disclosure doesn't mean that the 570 disclosure goes away. Okay, and remember, whenever you are adding EOM paragraph, the language auditor will have to communicate with TCWG. Okay, he will communicate that matter with TCWG. It is 8 minutes in the session. 8 minutes in the session for EOM paragraph. Write in the chat box, did you understood EOM? Right? EOM done. Have you understood emphasis of matter, bacho? So that now I can start with other matter paragraph. But before that, I want a confirmation that EOM is clear. Have you understood EOM, bacho? I told you it will take me maximum 15 minutes, 1-5, to complete this standard. Okay, it is just 8 minutes in the session and we are through with emphasis of matter paragraph. And I already told you from an exam perspective, EOM paragraph is more important. One second, I'm just having some hot water. Okay. Okay. Chalo. Let us go ahead. Students who have not yet followed me on Telegram, please ensure that you follow me on Telegram as well. Okay, just type in my name, as you can see the name here, and just let me know in the chat box if you are able to find my account. Okay, my name is given out here. Okay, just ensure that are you able to find me on Telegram and join that group. Okay, because on Monday, guys, I am conducting a test. Okay, that test is going to be an MCQ test. It will be a test on Monday in the evening at 8 p.m. Okay, it is a test on Monday evening 8 p.m. It is on chapter number 1. If you guys want, you can join the YouTube session. Okay, the link will be given to you. You have to join it, and there's going to be a Google form for MCQ practice. And point number 2, I will be asking one question. That one question you have to write down and send me the PDF. I will check that and I will revert back. Got it? Just let the people who are live, just let me know, are you able to find me on Telegram? Chalo, let's go ahead. Okay, let us go ahead, bachcho. We are looking at other matter paragraph. Which paragraph? Other matter. Okay. Now remember this paragraph. Okay, able to find, right? Okay, perfect. Now this matter, pay attention. This paragraph, auditor will add. Now pay very close attention. This paragraph, guys, the auditor will add when he wants to discuss something about his audit, he wants to discuss something about the auditor's report, or he wants to discuss something about his auditor responsibility. Okay, it is showing as a personal account. Okay, it is showing as a personal account. So should I change that from personal account? One second, hold on. It is ideally not a personal account. People are able to join. See, Baswana just joined. Arshita joined. Baswana, you're able to join, right? Baswana just joined. It is public only, beta. Just 1 second, guys. Okay. Chalo, perfect. Let us go ahead now. Okay. Actually, some students wanted the MCQ practice link. I've sent that link to everybody. Okay, bacho. I was saying that focus now on other matter paragraph. Okay. Bacho, other matter paragraph is a paragraph that the auditor uses when he has to speak something about his audit report, about his auditor responsibility, or he wants to speak something about his audit. Okay, these are the areas where he will use the other matter paragraph. Okay, see, when can you use the other matter paragraph? When you are not prohibited by law or regulation and when 701 applies. When 701 applies, the matter is not determined to be a key audit matter. So therefore, always remember, if a matter fulfills the definition of key audit matter, okay, if a matter fulfills the definition of a key audit matter as well as other matter, I'm repeating once again, if the matter fulfills the definition of key audit matter as well as other matter, then in that case you will disclose it as a key audit matter. Okay, if it does, if at all the matter is not fulfilling the definition of key audit matter but it is fulfilling definition of other matter, then in that case you will show it as a other matter paragraph. I hope the logic is clear. Okay, now let us go to the next one, that is essay 299. Okay bachcho. Sorry. हाँ बच्चों. Now when it comes to the other matter paragraph, you need to be very well versed that other matter paragraph will be used in which cases. Okay, one case is of essay 299. Okay, now you very well are aware of in essay 299 what happens. Ideally guys, there is going to be a joint audit report that will be given, barabar na, joint audit report. But if the joint auditors are not agreeable on one opinion, then there is no need to go by majority. You can give your separate opinions. Okay, but remember, when you are giving your separate opinions, both the auditors have to refer to each other's audit report. Okay, and that reference should be given in the other matter paragraph. I hope the logic is clear. I'm repeating once again. In essay 299, both the joint auditors should give a single audit report. But if there are difference of opinion, then no need to go by the majority. You can give your separate report, separate opinion. But when in that situation, when there are multiple reports, all auditors have to refer to each other report in the other matter paragraph. I hope the logic is clear. Okay, next point. I will show you this next point practically. Let me just show it to you. Hold on. I believe I have that audit report. All the students, oh, sorry. Okay, anyways, I'll show it to you from here only. Okay, achho. Look at the next point. Now, as you're aware of, guys, okay, when the auditor is auditing the holding company, focus on this point. Let's suppose EY is auditing holding company and they have a subsidiary company is being audited by PwC. Okay, now you are very well aware of that the subsidiary company will prepare its SFS. Suppose the SFS shows a turnover of 100 crores. The holding company, guys, will prepare its SFS and they have a turnover of, let's say, 400 crores. Okay, now the holding company, as you're aware of, will also prepare something called as CFS, and the CFS, guys, will show a turnover of, let's say, 500 crores, correct, which is the holding company and subsidiary combined. Now EY is going to issue a report on CFS as well. It will issue a report on SFS as well as CFS. Now in that CFS wala audit report, CFS audit report, EY will add a other matter paragraph. What will EY do? In this audit report, EY is going to add a other matter paragraph, and in that other matter paragraph, EY is going to specifically focus on, EY is going to specifically state that out of 500 crores revenue shown in the CFS, we have not audited 100 crores worth of revenue, and for that we have relied on the subsidiary auditor, that is PwC. Okay, can I say this is a clear-cut division of responsibility, guys? And I hope you understood. This kind of language will be seen in the other matter paragraph. See, in the case of audit of CFS, the principal auditor will state that division of responsibility between principal auditor and other auditor. Okay, and last point, how will you show other matter paragraph? clearly there will be a separate paragraph with a separate heading, and you have to indicate at the end that your opinion is not modified in respect of this matter. Got it? Okay, Acho. Everybody who has joined live, please write in the chat box other matter paragraph done. With that, guys, we have covered up 2 standards. We have covered up 705 as well as 706. Can we move to the next standard now? Everybody in the chat box, any doubt with respect to 705, 706? If not, we can move to the next standard. Can we go ahead to the next standard, bachcho? Okay, perfect. I've got the answer from everybody. Let's move ahead. Okay, Acho. Now, let us all go and study key audit matter paragraph. Okay, that is 701. Okay. Now, before we go and study the paragraph, I want you guys to see the paragraph once. Look here. Anshul sir, I think so, has won an award. I'll just congratulate him for a minute, guys. Okay. हाँ बच्चों, चलो. Yes. Look out here. I don't know if you can see or not. Okay. I'm sure it's visible now. Okay, bachcho. Now, first thing, remember what is 701. It is key audit matter. Okay. Now, what was actually happening? Focus, huh? Guys, our audit report, you saw that it is a set format, correct? So, what was happening is, because the audit report had a set format, what was happening is that the audit report, guys, somewhere or the other was losing its communicative value. What was happening is that our audit report was losing its communicative value, and because of that, because it was losing its communicative value, people had started giving less importance to the audit report. Now, in order to avoid this, institute came up with the idea, and institute thought, let us now start adding a key audit matter paragraph in the audit report of few select entities. For example, they made it applicable on listed entities. They made it applicable on public interest entities, means if the auditor wants, he can add it in public interest entities, means or entities which have a has a huge well, the logic can be is that, for example, mutual funds, insurance companies, wherein they have so many customers, okay, and what happens is that the public at large is benefited from the services of these companies. Those are public interest entities. If the auditor wants, he can add it there as well. If the law and regulation wants that key, the auditor has to add it at some particular place, then the law and regulation also can specify. Okay. So the moral of the story is that our audit report was losing its communicative value. People were paying less attention to the audit report. That is why the institute came up with this idea that now let us start having a key audit matter paragraph in listed entities and other entities as well, which I just discussed. Okay. Now, what is this key audit matter? The institute said, auditor, you do one thing. Okay. In your entire audit, there might be many stuff you might have discussed with the TCWG, correct? There might be many areas which those are so important areas that you discuss them with TCWG. Bring that list. Out of that list, if any particular area is very risky, it had a high risk of material misstatement, it required a lot of judgment on your part, it required significant efforts on your part, then what you do is that particular matter, okay, that particular matter you disclose it as a key audit matter in the audit report. Okay. And not just this, the institute asks the auditor to write how our audit addressed this matter. Means, how did we audit? What were the procedures that we applied in order to tackle that significant matter? Got it? As you can see out here, company has recognized advertisement revenue of 213 crores, which is 50% of the revenue. We identified advertisement revenue as a key audit matter. So you have to write the reason also why. Why was it a key audit matter? Because there are inherent risks regarding existence and accuracy of the revenue. Auditor felt that the revenue is not getting recognized properly. Okay. And then how did we audit it? How did we audit the revenue? Or as auditors, we check the appropriateness of the client's revenue recognition policy. It has to be in line with Ind AS 115, or when it comes to accounting standards as per AS 9, correct? Your revenue recognition. We checked that is the client following the policy according to AFRF. We checked the reasonableness of the timing and amount. Basically, we performed analytical procedures. We checked the design, implementation, and operating effectiveness of the key internal controls. We checked the key internal IT controls also. We checked the completeness and accuracy of information in the advertisement module, means the software. And last point is that detailed testing of sample of sales transaction. What did we do? We did whatever sample we had selected as per SA 530, we did a detailed testing of those samples. Now you tell me, students who are live, are you now feeling more connected with the auditor, yes or no? After seeing this paragraph, imagine you are the shareholder of the company. Okay, once you see this, that okay, the auditor identified this as a key audit matter. The auditor invested so much time and efforts. He took so much pain. He did so many procedures to audit this item. That is where your connection with the user, as an auditor, your connection with the user will improve and the communicative value of the audit report increases. I hope the logic is clear to you now. What is 701? Okay, let's go ahead and now see the chart. Okay, now see, majority stuff from the chart I've already taught you. See, point number one. Okay, point number one, what is the purpose? What is the purpose of introducing key audit matter? I told you that the audit report was losing its communicative value. So in order to enhance the audit report's communicative value, in order that the auditor is able to connect with the user, okay, and last, the auditor is able to provide additional information to the user. Okay, thank you Muskan, thank you Amna. These are the three reasons. These are the three reasons why these are the three reasons you need to know logically why the key audit matter para was introduced. Okay, in order to enhance the communicative value, in order that the auditor is able to connect with the user, in order that the auditor is able to provide additional information to the user. Got it? Okay, break will come at 6 p.m. Huh? At 6 p.m. guys, I will give you a 10 minutes break. Okay. Today's session will be till 8 o'clock. Understood? Today's session will be till 8 o'clock and break will come at 6 p.m. Are you clear? Okay. Next point. Applicability. Applicability, I already told you, it applies to listed entities. It, if the auditor desires, okay, it can also apply to public interest entities, for example bank, financial institutions, mutual fund, insurance companies, and entities where law and regulation requires, बराबर ना, where law and regulation requires, ठीक है, that is where guys the key audit matter paragraph will be applied. I hope the applicability also is clear. In my explanation itself, I have taught many things. Okay. Where all it applies, listed entities. If the auditor desires, then it will apply in public interest entity. And guys, where all law and regulation requires key audit matter paragraph should be there, auditor has to put that key audit matter. Next point. Okay, bachcho, meaning. Key audit matters are those matters where auditors spend significant time and efforts. Remember, what is the meaning of key audit matter? These are those matters where auditor has invested significant time and efforts. That is the meaning of key audit matter. How will I identify the key audit matter? Okay, I told you, institute has said, auditor bring the entire list of matters you communicate with TCWG, right? These are selected from matters communicated with TCWG. Okay. Next point. After this, once you get these matters, once these matters are selected from matters communicated with TCWG, now out of that list, identify which is the matter which is a highly risky area, which matter has high risk of material misstatement. Point number 2, where there is significant auditor judgment required with respect to significant management judgment. I've given an example also, provision for diminution in the value of investment. Now guys, to make that provision, the client must have had significant management judgment to be placed, and in order to check that, it's significant auditor judgment also is required, so that will form part of your key audit matter. And the last point guys, significant event that occurred during the year. Let us suppose there was the client went public this year, or the client made a huge acquisition, or there was a demerger. Then all those cases the auditor must have spent significant time and efforts. These significant events that occurred during the year will form part of your key audit matters. Got it? Okay, so matters where auditor spend most time and efforts. Got it, bacho? Now the next point, now focus very carefully. What have we studied till now? Till now in 701 we saw why the institute introduced key audit matter, what was the purpose. Point number 2, we saw that what exactly is the meaning of key audit matter. We saw in which all entities auditor has to apply key audit matter paragraph. Then we saw how will the auditor identify key audit matters, right? Which matter are key audit matters? Okay. How will the auditor identify which matters are key audit matters? Guys, just 1 minute. Hold on for a second. Okay, achha. Let's go ahead. Okay, now as I told you that after doing all these efforts, after putting in so much efforts, auditor identified the key audit matters. But obvious, now he should report those matters in the audit report, correct? But institute says that auditor, it is not always necessary. What does the institute say? Institute says that it is not always necessary that all matters selected need to be reported. Okay? When is the key audit matter selected not required to be communicated? I call this as a U-turn question. Why U-turn? Because you're going in a straight path. You followed the entire 701. You identified the matter. Now you are about to put it in the audit report, but now institute says, wait, first check if it falls here. Guys, if the law and regulation prohibits, then we are nobody to go against the law. So if law and regulation does not allow you to disclose, then don't disclose it. And point number 2, standard says, if the negative impact of such communication is going to be more than the positive impact, means what? If the adverse consequences of the communication will outweigh the public interest benefit. What is the sentence? Pay attention. If the negative impact is going to be more than the positive impact, that is, if the adverse consequence of communication will outweigh means the adverse consequences impact will be more as compared to public interest benefit, then in that case there is no requirement to communicate the key audit matter. But remember, this particular point will apply only if the auditor is disclosing key audit matter for the first time. If the public already knows about that matter, okay, and now you're communicating, then there is no need to, because that adverse impact has already gone. That adverse impact has already been taken care of. Okay, so remember, this point will apply only when the auditor is the first person who is showing that matter to the public. Okay, and the last point, guys, last point is the scope, right? Scope of key audit matter. Remember, key audit matter paragraph is not a substitute for, it is not a substitute for modified opinion as per 705, not a substitute for disclosure which the client has to put, and it is not a substitute for reporting as per 570. Okay, same point. I am repeating once again, it is not a substitute for modified opinion as per 705, not a substitute for disclosures that the client is required to put, not a substitute for reporting as per SA 570. Okay, and if at all I'm reporting key audit matter, then what should be the format of reporting? I have to first use an introductory language. I have to explain what the key audit matters are. I have to use a separate heading. I have to write why is this a key audit matter. I have to write how our audit addressed the matter, and I have to use the last line, our opinion is not modified in respect of this matter. This same language, guys, same line we had seen when we saw the EUM paragraph and the OM paragraph. Okay, I want a confirmation from everybody who is live in the chat. Have you understood 701 properly? Key audit matter is clear? Let me know in the chat. Is key audit matter clear to everybody? बोलो बच्चों, is key audit matter clear to everybody? Are you feeling more connected to the auditor now? ओके, मुस्कान बोल रही है जी. ओके ओके, सो क्यूटली सेड. चलो, वेरी गुड. कैन वी गो ahead now? चलो बच्चों, let us go ahead and now let me teach you some part of SA 700. ठीक है, because once we complete SA 700, then majority of the 700 series will be completed, right? Apart from 710, okay, we would have completed the entire 700 series. Okay, sir, why are we doing SA 700? Because it is a very small part. It will take us maximum 10-15 minutes and we will hit 6 p.m. and after that I can give you the break, so that the entire 700 series is over. Are you clear? Except 710. ठीक है, 710 के अलावा 700, 705, 701, 706. Are you clear? Understood? Let us go ahead and see the SA 700 बच्चों. ठीक है, okay, pay attention very carefully. Okay, pay attention very carefully. Now, Guys, when it comes to SA 700, okay, focus very carefully. You need to be very clear with the opinion paragraph drafting, with the basis for opinion para drafting. Okay, so what will be the draft of the opinion paragraph? What will be the draft of the opinion paragraph that we are seeing now? Look here. As you can see, the language is very easy. Okay, I'll mark the important stuff for you. Now, if you pay very careful attention, then you'll understand. Okay, opinion paragraph. First, the auditor has to say that we have audited. First, the auditor has to say that we have audited, we have fulfilled the audit, we have completed the audit of financial statements of Ringston Limited. Okay. Now you have to discuss about the financial statements which comprise of balance sheet as on 31st March, profit and loss account which comprise the notes to the financial statements, including summary of significant accounting policies and other explanatory information. So what did you do in the first paragraph? In the first paragraph, we simply said that we have conducted the audit. We simply said that we have conducted audit of which entity. We have said that we have conducted audit of financial statements which comprise of so and so. That is the balance sheet, that is the profit and loss account, the notes to accounts, including summary of significant accounting policy and other information. Okay, that will always form part of your para 1. In the para 2, you have to write your opinion. My opinion is that in our opinion, and to the best of our information and according to explanations given to us, how much soever we have checked, whatever information we have checked, we believe that the aforesaid financials give the information required by the Companies Act. If your client is a company, you have to write that your financials give the information required by Companies Act and give a true and fair view in conformity with the accounting principles. Okay, bus, that is the language that you need to write with respect to the state of affairs and P&L. For the balance sheet and P&L, we believe that it is showing a true and fair view. And remember, in the exam, they can trick you. Instead of give a true and fair view, you can also use presents fairly in all material respects. In the exam, they can use this language as well, presents fairly in all material respects. Okay, I hope the opinion paragraph is clear to you, right? So in short, we have just now discussed the title has to be independent auditor's opinion. I told you addressee has to be to the owners of the company. Barabar na? Third, we just saw the auditor's opinion paragraph. I showed you question number 1. Okay, what should be the language of opinion paragraph? Now let's go and see the language of basis for opinion para. What should be the language for basis for opinion paragraph? It is divided into 5 simple points. First point, you need to state that we conducted our audit in accordance with the standards on auditing. Point number 2, our response, you need to refer to your responsibilities, and those responsibilities are stated where in auditor responsibility para. So remember, in your basis for opinion paragraph, you have to always give details of to why, how are you able to reach the opinion. You are able to reach the opinion because you did your audit in accordance with standards, because you fulfilled all your responsibilities. Where are these responsibilities given? In auditor responsibility para. Because you are independent of the entity, because you fulfilled all ethical responsibilities, integrity, objectivity, professional competence and due care, confidentiality, professional behavior, because the evidence that you received is sufficient and appropriate. In short, you are giving a holistic view as to why you are able to reach the opinion because of all these factors. Okay, chalo. Next, one important point you need to remember is that, see, whatever is marked as hashtag, okay, hashtag means what? This point. Which point, bacho? The point number 2 and the last point. Second point and fifth point. These points you will not add in basis for disclaimer of opinion section. Remember one point. These 2 points you are not going to be adding in basis for disclaimer of opinion. Remember that. Okay, acho. Now next is going to be the management responsibility paragraph. How will you draft the management responsibility paragraph? Very simple. First, we have to write that management is responsible for preparation of the standalone financials, right? Management is the one who is of course going to prepare the financials. So that is the first responsibility. And they have to prepare the financials in accordance with accounting principles. That is their responsibility number 1. Responsibility number 2 is that they have to ensure that they maintain adequate accounting records for safeguarding assets, preventing detecting fraud, selecting and applying appropriate accounting principles, making judgments, designing, implementing, maintaining internal financial controls. All of this is the client's responsibility. Okay. And third point, it is their responsibility to assess whether the organization will continue as a going concern or no. And it is their responsibility to oversee the financial reporting process. So these four things will come in management responsibility paragraph. Okay. Point number one, financials is something that they will prepare. They will ensure that they are able to safeguard the assets, prevent, detect fraud. They will ensure that they are maintaining a proper internal control system. It is their responsibility that they will be able to it is their responsibility to assess about their going concern. And last point, they will be overseeing the financial reporting process. Okay. Next point. Okay, now we have seen three paragraphs. We saw opinion paragraph, we saw basis for opinion paragraph, and we saw management responsibility paragraph. Now remember what I'm teaching you next. I'm teaching you what should be the location of auditor responsibility para. Okay, there is a huge controversy on this. Okay, so that's why remember where should be the location of auditor responsibility. Where should I by the way, the reason why this question is coming up is because guys, the auditor responsibility para is a huge para. Okay, so therefore the auditors are confused. Where should we put it? Should we put it? So instead, I said you can put it within the body of the auditor's report. Very simple. Add it in the report itself. Point number 2, you can add it as an appendix to the auditor's report, in which case the report shall include reference to the location of the appendix. Basically, you can add it as an annexure at the end of the report. Okay, because it's a huge paragraph, right? So instead of putting in between the report, you can add it as an annexure. And third point, remember, you can, if at all, law and regulation requires that auditors have to put their responsibility on a website, then we can refer to the responsibility on the website also by a specific reference within the auditor's report to the location of description on website of an appropriate authority where law or regulation or national auditing standard expressly permit the auditor to do so. Basically, let's suppose the institute. Let's suppose, guys, the institute has added all the responsibility of auditor on the website, and they came up with a notification stating that auditors don't add the responsibility paragraph now in the audit report, simply refer to the website. Then only we can refer to the website, or else we can't. Got it? So remember, three areas: within the audit report, as an annexure, or to the refer to the website. Got it? Okay. And the last point which is added for you guys, okay, if at all, remember, if at all the exam is going to be ultra difficult, question will come on this point. Okay, if the exam will be ultra difficult, the way in which the exams are coming now, very high chances that Jan attempt will be difficult. Okay, because you saw September was difficult, November CA final is difficult, so the institute has started showing its true colors. Okay, so therefore students who are going to be confused, who have not done every concept in the book, okay, I'm very sorry, you will not be able to clear. Okay, so what are we seeing now? Content element of auditor's report prescribed by law or regulation. What is the meaning of this? I'll explain it to you by way of an example. Let's suppose my client is a cooperative society, and what is happening? If my client is a cooperative society, the Cooperative Societies Act applies on my client. And let's suppose the Cooperative Societies Act is giving a proper format of the audit report. Okay, is giving a proper format of the audit report in which the auditor has to prepare, auditor has to prepare the report in that format itself. Now, remember, when the auditor is preparing report according to that format, he has to use that format, but in that report, can he refer to the institute standards that he is audited according to the institute standards? Can he refer to the Indian auditing standards? Guys, he can refer to that provided the format given by the cooperative societies law includes at minimum these points. If these points are there in the cooperative societies report, okay, the format of the report, if these points are there, only then the auditor can refer to the Indian auditing standards. Got it? Let us mark this. See what is given, bacho. if the auditor is required by law or regulation to use a specific layout or wording of the auditor's report, the auditor's report, see, if the auditor is required by law or regulation to use a specific layout or wording of the report, the auditor's report shall refer to standards on auditing, the institute standards, only if the report includes at minimum each of the following elements. Okay, just give me 1 second, guys. Hold on. Okay, Acho. Chalo. So as I was saying that बच्चों कि content or element of the auditor's report prescribed by law or regulation If the auditor is required if the auditor is required by law or regulation to use a specific layout or wording of the auditor's report, the auditor's report shall refer to standards on auditing only if the auditor's report includes at a minimum each of the following elements. Okay, as you can see, majority of the elements are similar to our audit report. Okay, title, addressee, opinion section, identification of the entity's financials that have been audited, a statement that auditor is independent, where applicable a section that requires as per SFI 70, basis of the opinion paragraph, where applicable 701 paragraph, a description of management responsibilities, a reference to standards on auditing, and the law and regulation, auditor's signature, place, date. Okay, so done. With that, bacho, we are completed your 700 standard also. Remember one important point, always the audit report has to end with a UDIN. Okay, unique document identification number. Okay, it is an 18-digit alphanumeric number that has to be added at the end of the audit report. It's a proper website. Auditor has to add details about the audit on that website. And once you add details about your audit on that website, the website will generate a UDIN, and that UDIN you have to add in all the certificates in all the reports. Got it? Okay, so with that, we have right now completed with what? We have just now completed with bacho. This is your entire all standard English marathon. 1 second, hold on. Day 1 is what? 23rd November. We covered up SA 705, then we covered up 706, then we covered 701, then just now we covered SA 700. Okay, chalo. Now guys, the next part we'll cover more standards. It is 6 o'clock. Take a break. Okay, take a break for 10 minutes, then we'll rejoin. Okay. Hello. Yo guys, let's restart. चलो भाई शुरू करते हैं. चलो. All the students are live. Can you start now? चलो बच्चों शुरू करते हैं. Now. Let us start with SA 501 now. Okay बच्चों. चलो. SA 501, a very important standard from the institute standpoint, from your exam standpoint, inter exams. Okay. बच्चों SA 501 talks about audit evidence, specific considerations for selected items. I repeat once again, audit evidence, specific consideration for selected items. So we are not going to be discussing about many items. We'll only be discussing about 3 items. Okay. First item is inventory. We are going to be discussing everything about inventory in detail. Point number 2 is litigation and claims. Okay. And next point number 3 is going to be segmental reporting. These are the 3 items. Now, as you're aware of, always any item that you're picking up for auditing, you need to ensure that you check multiple assertions with respect to that particular item. But remember, SA 501 does not discuss about multiple assertions. SA 501 speaks about only specific assertions. For example, when it comes to inventory, we are going to be discussing only about one assertion, existence and condition of the inventory. When it comes to litigation and claim, we are going to discuss only one assertion, that is completeness. When it comes to segmental reporting, we are going to discuss only one assertion, presentation and disclosures. Got it? Understood? For the students who are unaware about what exactly assertions mean, let me just give you a quick recap of what does assertions mean, bachcho. Pay attention. Okay. Assertion means what the client is trying to tell you, what the client is trying to implicitly or explicitly convey to you via the financial statements. For example, if the client has shown plant and machinery worth 10 crores, it's a balance sheet item. So the client is trying to imply that the presentation and disclosure is as per AFRF. We have shown complete details of the plant and machinery in the financial statements. No plant and machinery has been skipped by us. They are saying that plant and machinery actually exists. They are saying that the valuation is proper, basically the cost as minus accumulated depreciation. The valuation is proper. All the machinery up to 31st of March is covered here, that is cut off. And last, if it is an asset, then we have a right on the asset, and if it is a liability, then we have an obligation to pay. So all of these are assertions for which the auditor keeps gathering evidences. Okay, I've given the HTR also to you, presentation disclosure of complete electronic VCR. Presentation and disclosure, complete is completeness, E is existence, V is valuation, C is cutoff, and R is rights. Presentation disclosure of complete electronic VCR. Now, therefore, very obviously, when as an auditor, I am going to check a balance sheet item of inventory, I need to get evidence on all assertions: presentation, disclosure, completeness, existence, valuation, cutoff, and rights. Barabar hai? But SA 501 will only help me with one assertion, that is existence and condition. It will not help me with any other assertion. Okay. Now, let us start. Now focus, I'm first going to be covering only the part A, that is first point of inventory. What does the standard say? Standard says that auditor first check if inventory is material to your client or no. If inventory is material or inventory is immaterial. For example, if your client is a service entity, then in all probability inventory will be immaterial, right? So therefore the procedures given under SA 501 will not apply. However, if at all your client is a manufacturing entity or trading entity, of course inventory will form a major portion of the financials and it will be material, and that is exactly where the 501 will apply. What does 501 say? 501 says that the following audit procedures will apply for stock audit. Okay, now in this scenario there are going to be two cases. One is called as a general case and the other are the special cases. Okay, first we will see everything about the general case. Okay, once the general case is over, after that I will take you guys to the special cases. Now what is the general case? The general case is that the client is conducting the stock counting on 31st of March, and the auditor also is doing the stock audit on 31st of March. So it is very clear, it is decided between the two of them that the client will do the stock counting on 31st March, auditor also will do the stock audit on 31st March. Okay, that's the best case scenario. Okay, now in this scenario, the auditor has to do what? The auditor has to apply some general procedures. What should the auditor do? The auditor should apply some general procedures. What are these general procedures, guys? The general procedures are, I have given a HTR to remember all these procedures. What is the point? Evaluate IPO records. What is the point? Evaluate IPO records and they should equal actual count results. What is the HTR, bacho? Evaluate IPO records and these records should match with the actual count results. That is the language, that is the simple sentence you need to remember. Evaluate IPO records and these should match actual count results. Okay, now what do you mean by this? Focus. The sentence that you'll remember from evaluate is evaluate management count procedure instructions. Now be very careful. Don't use simple words like counting. Use a bit difficult words like count procedures. So evaluate management count procedure instructions. All the just 1 second, guys. 1 second. Okay, sorry guys. Yeah, I was saying that bacho, evaluate IPO records means what? Evaluate the management count procedure instructions. So basically what does it mean? It means that the client team, the warehouse manager will give some instructions, right? The warehouse manager is going to give some instructions to whom? The warehouse manager will definitely give some instructions to his team that you please go and do the counting in this manner. So as auditor, remember, you don't have to do all the counting. You have to evaluate how the management is giving the instructions to the client and how the management is giving the instructions to the team. Point number 2, inspect some of the inventory. Do the inspection of some inventory. As you're there in the go down, do inspect some inventory. Okay, you need to perform some test count. Ask your intern to do some of the test counting. Ask your intern to do some of the counting. Okay, next, the client's staff will do the counting according to the instructions given. So you check if they are actually following those instructions or no. Observe the performance of management count procedures. And last is a very simple point. What is the final counting results? With the final counting result, that result should be inserted in the final inventory records. For example, if let's suppose the total inventory count that happened came to 10 lakh units, and in the final inventory records you're putting 11 lakh units, so then there is no sense of doing the stock counting. So remember, verify entities' final inventory records should match whether they accurately reflect actual count results. Got it? Now The standard also is asking you to basically identify matters relevant in planning attendance. Means what? It is these points you need to take into consideration before you decide whether you have to go for the stock counting or no. Okay, what is the HTR? The HTR for this is print please. Now pay very careful attention. The spelling of print please is PLISE. Okay, print please. Okay. For example, the first P will stand for whether the entity maintains perpetual inventory system. Guys, perpetual inventory system is an automated system. So if your client is maintaining perpetual inventory system and it is a reliable system, then in that case, even if you don't attend the physical inventory counting, it's okay. R for risk of PRINT, P for perpetual inventory system, R for risk of material misstatement, I for internal control system, N for nature of inventory, T for timing of physical inventory counting. PIC is what? Physical inventory counting. Okay. So remember at least the 5 points you need to remember very well. Print, PRINT. Okay. P for perpetual inventory system, R for risk of material misstatement, I for internal control system, N for nature of the inventory, and T for timing of the physical inventory counting. 5 points. For example, if the risk of material misstatement related to inventory is very high, you should definitely attend the physical inventory count. If the internal control systems are not satisfactory, you should definitely attend the inventory counting. If the nature of inventory is such, let's suppose it is a dangerous inventory, okay, it is hazardous inventory, then you can skip the counting also. Okay, and timing of the physical inventory counting should match with your schedule as well. Got it? Okay. And last, print please, PLISE. P stands for procedures, L for location, I for instructions, S for stage of completion, and E for export. Okay. So remember what audit procedures are expected to be established for physical inventory counting. If you believe that the client will establish good count procedures, then in that case you can skip the counting. L for location. Let's suppose if the client's inventory is at a location where you believe that there is high chance of misstatement, then please go and attend the counting. Whether proper instruction will be issued for what do you believe? Do you believe that the client's management is going to issue proper instructions to them to its own team for physical inventory counting? Do you believe that they will be following those instructions? Based on that, you can take the call whether you have to go or no. Got it? Next point क्या बच्चों? Whether proper instruction will be issued for physical inventory counting, stage of a completion of WIP, and last is what? Whether assistance of auditor expert is needed to obtain sufficient appropriate audit evidence. Got it? If you believe that then expert is needed to do this, then expert is needed, then in that case you should definitely engage the expert and then go for physical inventory counting. Understood? All of these points you need to take into consideration, guys, before you do the physical inventory count. Got it? Next, special cases. Okay, next point, guys, now pay attention. Many a times exam institute will ask you questions on these special cases. Okay, point number 1, when the stock audit is planned on any date other than balance sheet date. क्या बोला मैंने? Whether the stock audit is planned on any date other than balance sheet date. Okay, it is already planned. If it is planned on a date other than balance sheet date, in that situation, guys, what do you have to do? The moment you reach to the stock to do the stock audit, let's suppose you reached on 27th of March. It was already planned that you're going to be doing the stock audit on 27th of March. The moment you reach the go down, you have to do the general procedures, that is evaluate IPO records. वो तो करना ही है, ठीक है? Point number 2, you have to also do some additional procedures, that is you have to do stock reconciliation for, because see, you reached on 27th of March, so therefore now you know what is the stock count on 27th, but balance sheet requires 31st March stock count. So you need to do transaction, you need to audit the transactions of intervening period also. Okay, matters to consider while designing these procedures. Now pay attention very carefully. This is a hidden question. Okay, this question can come in your exam. Okay, pay attention. I just told you that you have to perform audit procedures on the intervening transactions. Now, how much procedures to perform will depend upon these 3 points. Point number 1, whether perpetual inventory records are properly adjusted. Means what? Is the organization's perpetual inventory system, the automated system, is working well? The reliability of the inventory records, is the system reliable or no? And last point, reasons for significant difference between information obtained during the physical inventory count and perpetual inventory records. So the reasons for different, if the reason is such that the physical inventory, the perpetual inventory record which are there, the perpetual inventory record system is not working properly, then in that case you have to do additional procedures between that intervening transaction. Got it? Okay. Now suppose guys, the stock audit. Now what is this part? Stock audit is planned on any date other than balance sheet date. Barabar na? Let's suppose stock audit was planned on a particular date, but due to unforeseen circumstances, the auditor could not attend on that planned date. Okay, you could not do the stock audit on that day. Let's suppose the client had, let's suppose 27th of March. You and the client both decided that we will go to the go down on 27th of March. Client reached, but because of, let's suppose, because of some strike, okay, on the way there was some strike, okay, and therefore you could not attend. Okay, therefore the standard says make or observe some physical inventory counting on alternate day. Basically, if 27th you're not able to reach, at least go on 28th and do some auditing. Okay, and of course you have to do the procedures for the intervening transaction, that is stock reconciliation. You have to do from 28th March till 31st March. That too you have to do. Okay, remember, the reason of general inconvenience, okay, cannot be a excuse for not attending stock audit. For example, if it is a just a, let's suppose there is a strike happening on this road. Let's suppose you can take a detour and reach the location, but it will take some time. Then you can't say that I'm not going to reach at all. You have to take the detour and reach there. Okay. So remember, general inconvenience cannot be the reason for you to completely skip the stock audit. You have to ensure that you, if at all it's possible, then please attend it. However, there might be circumstances when it is not possible. Example, lockdown. We discussed this at the start. For example, lockdown. If at all, in the case of lockdown, guys, it is not possible for you to attend the physical inventory count, right? Attendance at physical inventory count is impracticable. It is not possible for you to attend the physical inventory count. Let's suppose it is lockdown. Okay, then of course, now you let's suppose there's a war-like situation happening. You won't leave your place. In that situation, or you as an auditor, you will try to perform alternate procedures. For example, inspect documentation of subsequent sale of inventory purchased prior to the inspection date. Whatever inspection, which date was there. Okay, let's suppose 27th of March was the decided date, but you could not go on that date. So inventory purchased prior to that, if it is sold after that, you check the invoices so that you know that, okay, actually this inventory existed. However, if you're still unable to gather evidence, then you have to modify your opinion. Now, the most important point. Okay, many a times questions are asked on this point. Okay, inventory is held at third party location. Guys, if the inventory is held at a third party location, what will you do? You will perform one or both of the audit procedures. Point number one, you will request external confirmation from third party about the quantity or condition. I'm repeating once again, you will request external confirmation from third party about the quantity or condition. Next point, or you will perform inspection at the third party's place. You will visit the third party place and do the inspection of the stock. So two points, two procedures are basic procedures. One, you will either request external confirmation from the third party, and you can perform inspection at third party, or you can do other audit procedures as well. What are these other audit procedures? There are 4. Point number 1, inspect documentation with the third party. For example, if your client's goods are with a warehouse, then you check the warehouse receipt, you check the warehouse agreement, okay, so that you know that, okay, the goods are with the warehouse. Point number 2, request confirmation from the parties where the goods are placed. For example, I've given an example here. Mercantile agent has pledged the inventory. My client's inventory is with the agent, and agent has pledged the goods. Okay, then in that case, you can get a confirmation from the organization where he has pledged the goods. Next, attending or arranging another chartered accountant to visit the third party, and basically he is going to attend the physical inventory count. Okay, when the third party is going to be doing the stock audit, that time either you attend or you arrange another CA to attend that stock audit. Okay, and last point, guys, I want to know that if the internal control system at third party is very good. In order to know that, I can ask them to send me their audit report, or I can ask their service auditor to send me the audit report. Okay. So these are the cases. Remember, this service auditor point is what? Focus karna this point pe. See, obtain another report, another auditor's report, that is the third party who is there. Third party's auditor, he will send me a report. Or let's suppose the goods are basically being sent, let's suppose, to a job worker for some outsourcing work. Okay, then in that case, the job worker's auditor he will be called as a service auditor. He will give me the report. Got it? I'll give you an example of this. Let us suppose my client is HUL. I am the HUL is called, I am the user entity auditor. Let's suppose HUL has sent some goods to service organization. Okay, they have outsourced some work to an organization. Okay, then the inventory is where? Inventory is with the service organization. So therefore the service organization will themselves have an auditor. He will be called as service organization auditor. And this guy will prepare a report with respect to service organization's internal control system. Okay, this guy will prepare a report which is called as type 1 report or type 2 report, and that report will be sent to me. Got it? Okay, perfect. With that, guys, we have completed the entire 501 part A. What have we completed? Entire 501 part A. It was a very simple point. If you did it conceptually, then you'll understand if inventory is material, and if you're going on 31st of March, you have to do evaluate IPO records, and you have to basically ensure that when you're planning attendance at the physical inventory count, you have to take care of all these points. Print please. Okay. And guys, in special cases, if the stock audit was planned on some other date, you do the general procedures plus you do stock reco. If at all your audit was planned on a date but you could not reach, do the stock count on some other date. If at all stock audit was planned on a particular date but you were not able to go at all, do alternate procedures. Okay, if unable to gather evidence, modify. And last point, if inventory is a third party, we just saw all these procedures that which you can do. Okay, Muskan, you understood? Amna sir, do we have MCQ lecture today? Beta, today I have kept the marathon, so therefore I have not scheduled the MCQ session today. But tomorrow, hopefully, I'll be definitely scheduling the MCQ session again. Okay, beta. Chalo, can we go to the part B now? Part B talks about litigation and claims. Now focus, this is a very interesting point. Okay, you remember we have to discuss about what? Completeness, right? Basically, what does 501 help you with? 501 helps you with that to check whether the financial statements disclose complete details of litigation and claims. Okay, got it? Point number 1, if at all the litigation and claims have an immaterial effect on the financials, means very minor cases are filed, nothing major, okay, then 501 is not applicable. But if at all, guys, the disclosures have a material effect on the financial statements, then in that case the laws and the litigation and claims will of course require adequate disclosures, right? Will require complete disclosures. I'm writing the word complete, right? Because 501 helps you with this assertion, right? The completeness assertion, right? So in order to identify if the complete details of litigation and claims are disclosed in financials, auditor will perform audit procedures. Now, which procedures he will perform? In the exam, they will ask you which procedures. So you have to remember just one word. What is the HTR, guys? The HTR is the word claim. What is the HTR? The HTR, guys, is the word claim. Simply remember this. HTR is claim. Understood? Now, what does C stand for? As an auditor, you will check the correspondence. You will check the correspondence between the entity and external legal counsel. As an audit, you will check the correspondence between the entity and external legal counsel. Who is an external legal counsel? External legal counsel is a consultant who is an outside lawyer who is not your employee. He is a practitioner who is helping multiple clients. So as an auditor, I will check the correspondence communication between my client and their external legal counsel, because if at all there is a court case happening, then in that case they would have definitely discussed this in that correspondence. So you check the correspondence, email correspondence, letter correspondence, to identify what all cases are they discussing about, and are all those cases disclosed in the financials. Point number 2, you have to review the L for legal expense account review. Guys, in the financial statements, in the P&L debit, the client will have debited legal expenses. So you ask the client to give you the ledger of legal expenses, and in that you will identify all the payments done to lawyer for which cases, and just see if all the cases in the legal expense account for which the client has made payment, which are pending have been disclosed in the financials. Utkarsh is asking, sir, what is HTR? HTR is beta how to remember technique. ठीक है बेटा? Okay. Next, A stands for a written representation. A stands for get a written representation from the client asking them to list down all the court cases that are filed against them. ठीक है? Next, I for inquiry. Inquire with the management and the in-house legal counsel. किसके साथ inquire करना बच्चों? Inquire with the management and in-house legal. Now, who is this in-house legal counsel? He is the employee lawyer. He is the employee lawyer. ठीक है? Who is stationed in the client place itself, employee lawyer. So you ask them that what all court cases are filed against you. And last, M stand for minutes of the meeting. As an auditor, read the minutes of the meeting of TCWG, because if there's a court case filed, they would have definitely discussed it in the board meeting. Okay, guys, all of this, I hope the logic is clear now. CLAIM, ठीक है? C for correspondence, L for legal expense account review, A for a written representation, I for inquiry, M for minutes of the meeting. These 5 procedures you have to do as an auditor. Next point, once the auditor is performing these procedures, okay, he will assess how much is the risk of material misstatement with respect to identified litigation and claims. Okay, have they been properly disclosed in financials or no? And after doing these procedures, what is the indication? Are there other litigations also that may exist? That he will come to that conclusion. Therefore, when he believes that other litigations also may exist which he is not aware of, what he will do? He will try to seek direct communication with the external legal counsel. Remember, he will try to seek direct communication with the external legal counsel. But how? How can he speak with the external legal counsel? Standard says first do it via a letter of general inquiry. Okay, what is a letter of general inquiry? An inquiry wherein I'm simply asking the external legal counsel to please tell me how many cases are filed against my client. I am not giving any details. I am asking him to give me all the details. Okay. Now guys, there may be 2 options. Either he may reply or he may not reply. बराबर ना? बच्चों, if at all the external legal counsel is kind enough and he replies, then I simply need to check the information provided by him with the financial statement disclosure if they match or no. But in all probability, there is a high chance he will not reply. There is a high chance the external legal counsel will not reply. In such a case, what will you do? In such a case, guys, why is he not replying? Maybe the legal body is not permitting him, okay, to which he is a part of. The Bar Council of India is not permitting him to reply. Now the standard says send a letter of specific inquiry. Okay, first you send general inquiry, now you send letter of specific inquiry. In that letter, what all things I will write? I will write down all the list of litigation and claims which I know. I will also write down what is the management's assessment of outcome. Do they believe they will win this case, lose this case? What is the financial implication? How much penalty will they have to pay? And last, how much is the cost involved? What is the litigation cost that is involved in this? I will write down this. I will request the external legal counsel to confirm reasonableness of the management estimate. Does he also believe that, okay, in these cases, the management is correct, in which case management is incorrect? And I will give him a last request, take care that if at all anything is missing, then you please provide that. Now, when I send this letter of specific inquiry, again, there can be 2 cases. One, maybe I will receive the reply. I may not receive the reply. But so if I receive the reply, again, I need to compare the information provided by the external legal counsel with the financial statements. And bacho, if at all I don't receive the reply, then in that case, now the standard says, if you still believe that it is important to judge, it is necessary, if you still believe that it is necessary to meet the external legal counsel to discuss the outcome of the legal litigation, because without that, it is difficult to identify how much provision is required to be made. Without that, it is difficult to identify if there is a material litigation which requires to be disclosed. So therefore, in that case, if you believe it's important, vital, then in that case, you can go and meet with the external legal counsel in one of these three cases. Okay, what is the HTR? You will remember digital signature certificate. What is the HTR? You will remember in this. Remember digital signature certificate. Okay, digital signature certificate. What does it mean, bachcho? It means that if there is a disagreement between the entity and external legal counsel, means if the client and the lawyer they are fighting, then in that case better to go and meet. If it's a significant risky matter, better go and meet. If it is a complex matter, better go and meet. Okay, but always remember that you should always take the permission of the client and ensure that this meeting is happening in the presence of a management representative, or else don't attend the meeting. Got it, bacho? Everybody who is sitting in the chat, who is sitting in this class live, have you understood part A and part B both? Have you understood the entire part A and part B? I am just giving you a quick recap of part B as well. Very simple. I want to know if all the litigation and claim is disclosed in financials. Yes or no? If at all I need to identify that, I have to do 5 procedures: claim, CLAIM. Once I do this, if I feel that the list is complete, no problem. But if I feel that there are still some list that is pending, then in that case, I can go and speak with the external legal counsel first by way of general inquiry, next by way of special inquiry, and if I don't receive a reply to that also, then finally I can go and meet. Got it? Perfect. I hope you understood it very well. And but the last point which is there, segmental reporting, that is very simple. In that, auditor needs to simply check what? Pay attention. Auditor needs to simply check, okay, the techniques, the methods the client has utilized to identify the reportable segments according to AS 17. Okay, I'm repeating once again. Accounting Standard 17 is giving some formulae, is giving some method through which the company, the client, can identify which are reportable segments. Okay, for example, let's suppose there are 4 different segments, out of that 2 are reportable. Okay, so that 2 are reportable. How did you identify that? Using some method, and that method is given by AS 17. So auditor will check if the method used by the client matches with the method given by AS 17. If the answer reached by the client matches the answer reached by AS 17. If the reportable segments identified by the clients are the same that would have been reached if you followed AS 17. So that you need to compare. Is the point clear? Okay, bachcho. With that, we have just completed 501 also. चलो आगे बढ़े. चलो बच्चों आगे बढ़ते हैं. चलो बच्चों आगे बढ़े. Very good. Let us go ahead now. Okay, bachcho. Now we are going to start with essay 570. Okay, going concern. Let's start. Chalo bachcho. Can you start with 570 now? Are you guys ready? Are you guys ready? If you're ready, then write in the chat box ready. Are you guys ready? Do you guys want the screenshot for I'll actually send the PDF only na yaar. Okay, I was asking that if you want the screenshot for 501. Are you guys ready for 570 going concern? बोलो बच्चों. चलो, perfect. Okay, let us start with 570 now. Okay. One of the very difficult standards at the inter level. Many students are not able to comprehend the entire standard. Okay, but using this chart, okay, I'm pretty sure that it is going to be very, very easy for you, okay, to understand the entire standard. But mind you, this standard will take me minimum 20-25 minutes. Okay, so therefore you have to pay utmost undivided attention till the standard ends. At the end I will give you a recap. But before that we reach that recap, okay, you have to pay proper attention. Got it? First point. Whenever we start with 570, we need to first understand what is the responsibility of management. Okay, remember bachcho, it is always the responsibility of the management to assess whether company will survive in the next 1 year or not. What did I say? It is always the management's responsibility. If you remember very carefully, today itself, when we started with SA 700, we started with 705, but then I took you to 700 also, and I showed you the entire format of the audit report. In that, there was one paragraph called as management responsibility paragraph, which had 4 points. Out of that, one point was it is management responsibility to assess whether their business will continue for the next 12 months, right? That is, what is this called? This is called as doing a going concern assessment, that whether we will be able to pay the liabilities that will come in the next month, 12 months, and whether we are going to realize our debtors, our payments in the next 12 months. I hope the logic is clear. That is something the organization has to do. Every organization has to do this. This is called as going concern assessment. Now, once you do that assessment as a company, I'm not talking about the auditor. If the company comes to the conclusion that yes, my business is going to survive, okay, means what? For the next 12 foreseeable 12 months, my business will survive. I can very well pay the dues. Okay, then you use the going concern assumption. Prepare your financial statements on historical cost basis, basically the normal basis which you have been following till now. Okay. However, if at all as a organization, you come to the conclusion that my business may liquidate. Okay, basically in the coming 12 months, I may liquidate my business. I might not be able to I might not be able to pay the liabilities. I might not be able to recover my dues. Okay, then in that case, if you are very sure that your business is going to shut down within the next 12 months, then in that case, as a honest organization, you should not use the going concern assumption. You should prepare your financial statements on liquidation basis, that is realizable value basis. Okay, and what you should do is that as per AS1, you should disclose that going concern assumption is not followed. Okay, prepare your financials on liquidation basis. Ensure realizable value basis means what? The money that will be fetched right now in the market. Okay, and if you very well know, what does AS1 say? AS1 says that if you're not a going concern, you have to disclose that in the financials. Got it? I hope you're crystal clear with the management responsibility. Okay, because if you're not sure of this, if you're not sure of management responsibility, then we can't go ahead. Okay, If you understood the management responsibility, write in the chat box management responsibility done. Understood बच्चों? You understood management responsibility? चलो, very good. Now the next point. ठीक है, focus. Okay, now 100% focus. Pay attention. Let us look at case 1. Okay, there are 3 cases that we have to study. Out of that, I'm teaching you case 1 right now. Management assessed that the business will not survive. Management did the assessment which I just discussed, and after doing the assessment they came to the conclusion that business will not survive. For example, in the case of Chegg, this is a very latest example. Okay, I don't know if you're aware of, but guys, after ChatGPT is introduced, Chegg has lost 99% of its value. The share price has fallen 99%. Okay, because it was a doubt solving platform. Now everybody is going to ChatGPT to solve the doubts. So therefore, Chegg as a platform is over. Its business is almost over. Okay. So therefore, Chegg should not use the going concern assumption. Correct? Chegg should prepare financial statements on liquidation basis, that is realizable value basis, right? And plus the notes also should disclose all the facts that our business is not going to survive. Next, the auditor guys should audit, or whatever audit he has to do, he will do it normally. But remember, procedures given by 570 will not apply here. Okay, procedures given by 570 will not apply. He will do his audit regular as normal audit he is doing. He will do his audit regularly. He will check if the financial statements are showing a true and fair view or not. He will try to obtain evidence, and based on that he will give a, if he believes that the evidence obtained shows that the financials are showing a true and fair view, basically the business is not going to survive, and the financials also disclose the same thing, means the client is being transparent, the client is being true and fair to everybody, right? They are not hiding something. The client is being open about it, that my business is going to shut down, and therefore auditor will give an unmodified opinion. And in fact, auditor will also add an emphasis of matter paragraph. Okay, in that we have already discussed emphasis of matter paragraph, and in that paragraph he will refer to the note in the financials wherein client has discussed the impact of the fall in the share price, the fact that the business will not be able to survive, the fact that ChatGPT has come in and therefore the business will not survive. Auditor will refer to that note. Are you clear? This is your case 1. Okay, case 2. Case 2 is the example of Reliance Industries. Okay, management did the assessment. They know their business will definitely survive in the next 1 year. बराबर है? Therefore, guys, the client has used the going concern assumption. Financials are also prepared on historical cost basis. बराबर ना? Auditor has done the audit normally. Remember, procedures as per 570 are not required. Okay, because there are no problems in business. The business is going to survive. So there are no problems in business. So why to unnecessarily get tangled in SA 570? Auditor will do the procedures. He will gather evidence. If he believes financials are showing a true and fair view, he will issue unmodified opinion. Okay. Now see where 570 actually starts. 570 starts, SA 570 starts in case 3. You know what the problem is? The problem is that, guys, management has made an assessment that their business will survive. Management has done an assessment that the business is going to survive in the next 1 year. Management believes that they will withstand the pressure. They will be able to survive the next 1 year. However, and therefore, of course, they have used the going concern assumption also. They have prepared financial on historical cost basis. Who? The client. Client has prepared financial on historical cost basis. They have used the going concern assumption, stating that they are going concern. But you know what? The auditor has a doubt over the going concern. Auditor has a doubt that he believes that there is material uncertainty in relation to going concern. He believes that the organization's business will not survive. And why? Why is the auditor thinking like this? Why is the auditor being so negative? Because guys, auditor is seeing that there are one or more either financial indicator, operating indicator, or other indicators existing here. You understanding? Auditor, when he is auditing, he is seeing that one either financial indicator or operating indicator or other indicators are there, because of which he believes that the client's business will shut down. Okay. सी मैंने क्या लिखा है, इंडिकेटर्स जो ऑडिटर के दिमाग में डाउट क्रिएट करते हैं. दीज आर द इंडिकेटर्स दैट क्रिएट अ डाउट इन हिज माइंड दैट आर दे रियली गोइंग कंसर्न, will they really survive next 12 months, will they be able to pay their debts in the next 12 months. All these questions are being raised in the auditor's mind, okay, because he can see these indicators. What are these indicators, guys? First, at the inter level they ask you these indicators straight. What are the financial indicators, guys? Negative working capital, huge losses. Okay, this huge negative working capital means current liabilities are more than current assets. If there are huge losses in the business, if the client has discontinued paying dividends, means of course there is money crunch. Credit to cash basis by suppliers have said that now we can't sell you goods on credit, you have to give you have to pay upfront. The banks are unwilling to extend loans, and the financial ratios, you're doing FM, right? Financial ratios are adverse. Okay, Acho? Now there are many operating indicators also. Operating indicators, okay. What are the operating indicators? Employees have left the organization, key management personnel have resigned, suppliers left, customers left, franchisees are gone, market share has gone. Okay, the intention to run the business has gone. Okay, and huge competition is coming. Okay, what did I say? 1 second. Employees left the organization, key managements left the organization, suppliers gone, customer gone, market share gone, franchisee gone, intention to run the business is gone, and huge competitors come in. Okay, all of these are operating indicators that are creating a doubt in the auditor's mind that their business might not survive. There are other indicators also, guys. Example, there are uninsured or underinsured assets and a catastrophe has struck. A catastrophe has struck and the client does not have adequate insurance. There is a change in law or regulatory policy that is expected to adversely impact the entity. I repeat, there's a change in law or regulatory policy expected to adversely impact the entity. Means what? Let's suppose your client is exporting some medicines, and in the next 5 months the government is going to ban the medicine. Okay, ban the medicine for export, so automatically your business is down. Okay, if you're not complying with some capital or other statute requirements. For example, guys, if you're very well aware of example, in the case of insurance companies, you need to have a capital of 100 crores. If you don't have a capital of 100 crores, the IRDA will shut you down. Okay, pending legal regulatory proceeding against the entity, if successful, will result in claim the entity is unlikely to satisfy. Means what? There's a enormous court case filed against you, and if you lose that court case, the penalty will be such that your bank accounts will go empty. You won't be able to pay the penalty. Okay, if these are the cases, guys, which your client is facing, then any blind man will also be able to say, that imagine if any one of the financial conditions, one of the operating conditions, one of the other conditions, if your client is facing any one of them, any blind man can say that the business will not work in the next 12 months, right? So try and understand what's happening. Case 3 is the case of mismatch. Case 3 is the case of mismatch where SA 570 actually applies. Okay, because see, there are two different perspectives out here. Client, auditor, client, auditor. Client is saying my business will survive, there is no problem, I will be able to get through this, I will be able to get through everything, don't worry, my business will survive. That is what the client is showing in the financials. What is the client doing? The client is preparing financials as per you are using the going concern assumption. The client is saying that I will face this head on. Okay, whereas the auditor is feeling that they will not be able to do this because of all these indicators. Because of these indicators, that is creating a doubt in his mind that they may not be able to survive. So it's a case of mismatch, and that is exactly where 570 applies. Okay. Now, what are the procedures given by SA 570? Point number 1, auditor should first review their going concern assessment, which you remember it was their responsibility to do this. Okay, that assessment should be for minimum 12 months. So first, If the client has not done the assessment, ask them to please do it. Ask them that please don't use these assumptions in the financials without doing an assessment. Ask them to do the assessment. Okay बच्चों, let's suppose the client has बच्चों, let us suppose the client has if the going concern assessment is done by the client, if the client does this assessment, then in that case you review the assessment. What you do is review the assessment done by the client. Okay, check if any additional facts are to be taken into consideration since the date of the assessment. What did I say बच्चों? Point number 1, very simple. First, check, review the assessment. Okay, point number 2, check if additional facts are to be taken into considerations since the date of the assessment. Okay, basically means what? I've given an example also. Let's suppose your client did the assessment in Feb 20 but submitted to you in May 20. Okay, then in that case it is not taking into consideration impact of March 20, right? COVID-19. So in short, if the client has done an assessment but if it is an old assessment, ask them to update it. Okay, next. If your client has prepared a cash flow forecast, as an auditor, you need to check the underlying data and you should check the assumptions in the forecast. Other procedures include request written representation from management for their plan for future action and feasibility of these plans. If they are saying that if there's a financial crunch, we are going to raise funding, what is the plan for funding? From where will your funding come in? Check that. Check the management's intentions. Got it? Check the management. आदित्य बेटा what you do is that कि एक बार ट्राई करो कि जो मैंने चार्ट्स बनाए हैं, ठीक है, चार्ट्स बेटा आपको टेलीग्राम ग्रुप पे मिल जाएंगे, ठीक है, ये जो टेलीग्राम ग्रुप पे मिल जाएंगे आपको चार्ट्स, ठीक है, मेरे चैनल के ऊपर भी ज्वाइन कर लेना, ये चैनल जो है मेरे नाम का चैनल आपको मिल जाएगा टेलीग्राम के ऊपर, उसके ऊपर बेटा आपको मैं चार्ट्स अपलोड कर दूंगा, उस चार्ट से पढ़ने की ट्राई करो, ठीक है, जितना आप वीडियो देख रहे हो ना, वीडियो देखने के साथ साथ में चार्ट पढ़ते रहो, प्रिंट मारो चार्ट का और चार्ट के साथ पढ़ते रहो, देन सी इफ यू आर एबल टू रिमेंबर, ठीक है. Okay, another important point is that attend the MCQ practice, attend the writing practice, Aditya. Okay, because MCQs will save your marks, correct? And point number writing practice will ensure that you are writing at least one answer with me in the class. Okay, so writing practice also happens daily, MCQ practice happens daily. So try attending the Aditya. Okay, it will definitely boost your marks. Okay, next point. Check the management's intention. Do they actually want to run the business? You should check all the various documents like debenture agreement. When is the payment of debenture coming in? When is the payment of loans coming in? And check the expected date of realization. When is the debtor's payment coming in? All of these things the auditor has to do in order to take a calculated guess. In order to take a calculated guess whether the going concern assumption is appropriate or not. Got it, bacho? Okay, see. Based on the procedures performed, the auditor will keep gathering evidences. Okay, and now the last stage is reporting. Suppose if the client has not done the going concern assessment, okay, they have not doing it, you requested them but they're not doing it, and the auditor also could not gather any evidence, okay, and if you believe the impact of possible impact of undated misstatement is material but not pervasive, you will give a qualified opinion. Material and pervasive, will give a disclaimer. We have already discussed about this in SA 705 at the start of this lecture, right? In the start of this lecture, I told you right hand side. I'll just show it to you once again. Look here. Okay. You remember, you are unable to gather evidence. If you are unable to gather evidence, we discussed possible effect of undated misstatement is material but not pervasive, qualified, material and pervasive, disclaimer. Same point we have written here also. Okay, so possible effect of undetected misstatement is material but not pervasive, qualified, and pervasive, disclaimer. But if at all the client has done the going concern assessment and the auditor concludes there can be two conclusions. One, are they actually going concern or they are not a going concern? Supposing if the auditor believes that the business will 100% shut down, if he believes that the client is not a going concern in the first place, means whatever plans they are showing me are all bullshit plans. There is no plan to raise funding. Their financial ratios are adverse. The cash flow forecast is completely bullshit. So clearly, the client has a lot of problems in business and there is no viable solution and liquidation is bound to happen. So clearly, in that case, You request the client to rectify the financials. You ask them to please prepare the financial on liquidation basis, not on historical cost. Because if you remember, that is where the entire problem stood. The client had prepared financial on historical cost basis, whereas auditor was believing that it should not be on that basis. So therefore, now when the auditor, after performing procedures, is very clear, ask the client to rectify. If the client rectifies, well and good. If the client rectifies, you give an unmodified opinion and you add an enforcer matter paragraph. But bacho, if the client is hell-bent, client is saying that we are not going to do the rectification, then financial statement, that is the financial statement, should be prepared on which basis, bacho? The financials should be prepared on liquidation, but financials are actually prepared on historical cost. So clearly the impact of this detected misstatement is material and pervasive. It is so huge that every number is incorrect. Barabar na? So you have to directly give a adverse opinion and add a basis for adverse opinion para. Okay. However, if as an auditor you believe that the business will survive, you in the future the business will survive, but as on date there is a material uncertainty. Means what? The client has a viable plan of action to get the entity out of the problem, but the plan is not yet implemented. It will be implemented in future, but you believe that they will be able to do it. Now check if the client has given all the disclosures. If the client has properly disclosed everything, means what? If the client, guys, has properly disclosed all the problem in business and the viable solutions, if they have disclosed everything, give an unmodified opinion and you add a material uncertainty in relation to going concern paragraph, wherein you will refer to the note in the financials. And remember, this is like a EUM paragraph only. Okay? What is the name of the paragraph? Material uncertainty in relation to going concern, wherein you will refer to the note where they have disclosed everything. But if the client has not disclosed properly or inadequately disclosed, then in that case you have to check the effect of the detected misstatement. If the effect of the detected misstatement, guys, is material but not pervasive, you will give a qualified opinion. Material and pervasive, you will give a adverse opinion. Okay, people who are live in the chat right now, we have just completed with 570. Write in the chat box, have you understood 570? If you understood, write 570 done. बोलो बच्चों. Hi Chavanprash. Hi Chavanprash beta, good evening. Hey Chavanprash, तेरा what is your actual name? I forgot your actual name यार. अरे anybody came to know what is the result of the Maharashtra election, guys? कौन जीता है यार आज? Because of this marathon, it was impossible for me to check. Thank you so much, beta. Thank you, Prem. चलो, Let's go ahead बच्चों. Okay. हाँ, I told you I'll give you a quick recap. Okay. So the recap goes like this. A 2 minutes recap, guys. For people who it is very I know as a student it is very difficult to keep the concentration on for 20 minutes at a stretch. Because I'm giving a 2 minutes recap. First, I told you management has to do the going concern assessment. If they believe business will survive, prepare financials on going concern basis, historical cost basis. If they believe business will not survive, prepare financials on liquidation basis. Don't use going concern assumption. Then we saw 3 cases. Case 1, where 570 procedures will not apply. Why will they not apply? Because the client is being very, very true and fair. The client is ensuring that they are showing what the actual picture is. They know business will not survive. They have prepared financial liquidation basis. Case 2, again the client is being true and fair. The client is being transparent. They know business will survive. They have used going consumption. No question of mismatch. Case 3 is the question of mismatch, where the auditor believes that there are problems in the business which the client is facing. He is seeing those indicators, either financial, operating, or others, because of which he believes that these indicators are creating a doubt in his mind over going concern. But the client has used going concern assumption in the financials, so client believes that business will survive. Now, therefore, 570 will get triggered and the auditor will do all the procedures given by 570. Once he does all these procedures, he will proceed to reporting. And in reporting, if he believes that the client has incorrectly used the going concern assumption, the business is bound to shut down. Ask them to rectify. If they rectify, well and good. If they don't rectify, give an adverse opinion. Okay. But if at all the auditor believes that the going concern assumption is appropriate, means they will survive, but the problem still exists right now, and the viable solution is there, but it will be implemented in future. Check if in this situation, check if the financials give proper disclosures. If they give proper disclosures, very good, means the client is being very, very transparent. The client is telling everybody the problem as well as the solution. Okay, therefore you'll give an unmodified opinion and material uncertainty in relation to going concern para. But if at all the client has not given disclosures or inadequately disclosed, therefore it tantamounts to misstatement. So auditor will now check the effect of the detected misstatement. If it is material but not pervasive, qualified, material and pervasive, then in that case, adverse. Got it? Perfect. Chalo, let us go to the next standard now. Now guys, we are going to one more important standard, that is SA 560. Okay, chalo, let's start. Okay, just give me 2 minutes. I'll just be back from the washroom. Just give me a minute. हेलो, चलो बच्चों, let us start. Okay, we are now doing SA 560, that is subsequent events. Okay, now pay very careful attention when it comes to 560. Focus now. First, I want you guys to have a very careful attention to the chart. Okay, now the year that has just gone by is FY 23-24. As you're aware of, we are currently in 24-25. The year that has gone by is 23-24. Therefore बच्चों, the date of the financial statements is 31st March 24. Okay, now the date of financial is 31st March 24. That is date of financial statements. Now uh, after 31st March 24, the second date that you need to remember is date of the audit report. Okay, date of the audit report. The date of audit report, guys, is always on or after the approval of the date of the financial statements. So in my example, the audit report is the financials are being prepared, approved on the 29th of June. Okay, so by the way, the date of approval of the financial is not relevant in our today's discussion. It is just being given as for you to understand that audit report date should always be on or after the date of the auditor's report. So my financials are approved on 29th of June, and after that on 30th of June I have given the audit report. After that, 5th September is the third date that you need to know, because 5th September is the date when financials are issued to the shareholders, ठीक है, or to the regulator, ROC. ठीक है, तो as you're aware of, always in the case of company, 21 days before the AGM you have to give shareholders the financial statements. So 5th September is the date when you're issuing shareholders to the shareholders, issuing financial statements to the shareholders. Okay, now remember बच्चों, as we started off 570, as we started off 570 with AS1, correct? The way in which we started off SA 570 with accounting standard 1. Okay, similarly बच्चों, we are going to start off 560 with accounting standard 4. ठीक है, we need to understand what is the client का responsibility. Pay very careful attention. The client's responsibility for events occurring after balance sheet date. Okay, after balance sheet date but before the audit report is issued. Okay, what is the client's responsibility? If it's an adjusting event. Okay, what do you mean by adjusting event? An event that gives additional information about conditions existing on 31st March. Okay, so therefore in this case, for example, on 31st March there was a contingent liability about a court case. After 31st of March but before financials are finalized, the court order is received. Okay, so therefore the impact of the court order you have to adjust in the financials and remove from the contingent liability. Means what? Adjusting event always requires proper adjustment. Okay, so remember, if at all something happens after 31st of March which is giving you additional information as on 31st of March, for example on 31st of March we had shown a contingent liability. Now what happened is that in the month of April, May, June, 30th June, 29th June was the date of financial approved. So before, let's suppose on the 15th of April the court order came, and the court order basically is asking the client to pay something. So now when the court order is asking the client to pay something, now no longer it is a contingent liability. So therefore the outcome has to be adjusted in the financials of 23-24, and you have to remove it from the contingent liability of 23-24. Got it? Let's suppose it is a non-adjusting event. Means let's suppose it's a fire. Okay, let's suppose on the 10th of April, that is after balance sheet date but before the financials are finalized, a fire broke out. Okay, on the 10th of April. So that fire is not connected to anything on 31st of March. So therefore it's a non-adjusting event. So in that case, in the last year financials 2024, the client simply has to give disclosure that there was a fire. No need to provide the impact of loss. That impact of loss will go in 24-25, but in 23-24 what will the client do? See, for impact 23-24 the financial will only require a disclosure of the loss by fire, but 24-25 will actually book that loss. Everybody who is right now online, please let me know, have you understood the client's responsibility? If you have understood what is the client's responsibility, write in the chat box management responsibility done. It is the management's responsibility to identify these adjusting events, and identify these non-adjusting events and give their adequate impact. Okay, for adjusting event, management needs to adjust it. For non-adjusting event, management needs to give the disclosure. If you understood, write in the chat box, management responsibility done. Okay, very good. Now, what is the auditor required to do? Simply, auditor has to check if client has properly followed AS4 or not. Bus. That is your SA 560. Pay attention. Na? Auditor's main responsibility is to check if the client has properly followed accounting standard 4 or not. Okay? If the client has followed it, then you give an unmodified opinion. If the client has not followed it, you ask the client to rectify. Basically, that is the audit adjustment, right? You ask the client to pass the rectification entry. If at all the client has not done the adjustment, ask them to do the adjustment. If the client has not given the disclosure, ask them to give the disclosure. If they do the rectification, give unmodified opinion. If they don't do the rectification, you give a modified opinion. Got it? So remember, guys, in all these cases, can you see this? In all these cases, the standards are very, very specific. SA 550 is introduced to check if the client has followed AS 18. SA 501, which we did, is introduced to check if the client has followed AS 17. Yeah, the segmental reporting. 560 is introduced to check if client has followed AS4. 570 is introduced to check if the client has followed AS1. Understood? The going concern wala fundamental disclosure. Got it? So in short, remember the standards are always introduced to check if the client has followed the accounting standards or not. Okay, now how will the auditor check? For this, we have to go to SA 560 in detail. Okay? Right now, guys, what you just studied is the conclusion. But in order to check this, auditor will have to do some procedures. What are those procedures? Now let's see. Focus. Pay very careful attention. I have given the entire standard in this chart. Okay, no need to refer to the study mat, no need to refer anywhere. If you pay attention for the next 20 minutes, okay, your 560 from the study material will be done. Okay, now remember, guys, we are going to be discussing about three periods. First period is the yellow period. It starts from the date of financials up to the date of the audit report. Period number 2 is the orange period. It starts from the date of audit report and it ends on date of issue of financial statements. And last is the green period, which starts from the date of issue of financial statements. Okay, so now there are three periods. Currently, we are going to discuss everything only about period number 1. Currently, we are going to discuss only about yellow period, not about any other period. We are going to discuss everything about yellow period only. Remember, it is in this period that the audit is being done in full swing. Correct? Audit is being done in full swing. The audit report is being prepared. It is in this period, right? The yellow period. Now, in order to check if the client has followed AS4 or not, the auditor will have to perform certain procedures, right? If you remember, similarly, procedures we had seen in 570. Similarly, auditor will have to do some procedures according to 560 also to identify the adjusting events, to identify the non-adjusting events. What is the HTR for this? The HTR that you have to remember, how to remember technique is obtain written representation from management, from IIM about procedures established by management. What is the line? Simply remember one line. Obtain written representation from IIM about procedures established by management. As simple as that. Okay, what is the line? Obtain WR from IIM about procedures established by management. Point number 1. Obtain WR from management that they have disclosed to the auditor all known facts. Okay, so obtain WR first. That they have disclosed to me all the known events. They have disclosed to me all the known events. Get into writing from them. I for read the interim financials, that is quarterly financials that the client must have prepared, if any, if they have prepared. Basically for the month of April, May, June. For these 3 months, read the interim financials. Next, I stands for inquiry. Do some specific inquiries which is given by SA 560. Ask them if you have raised any capital in April, May, June. Why April, May, June? Because of the fact that in my example, I'm completing the audit report in June. That's why. So I'm going to do some specific inquiries. Have you raised any capital? Okay, bachcho. Have you raised any capital during the April, May, June? Has any fire broken out between April, May, June? Has any debtor gone insolvent during April, May, June? Has any assets got destroyed during April, May, June? So do some specific inquiries. M will stand for read the minutes of the meeting. All the meetings that are held between April, May, June, auditor should read about them. Auditor should read about those minutes of those meetings, because if it is an important point, it will definitely be discussed in those meetings. Ask management with respect to procedures that they have established to identify subsequent events. Ask management with respect to procedures that they have established how do the management identify these events. Ask them. Okay, so these are the 5 procedures that you will do. Very simple. Obtain written representation. I will stand for interim financials. If they are prepared, check that. I for do some specific inquiries. M for minutes of the meeting, and check with the management what procedures that they have established to identify such events. After performing these procedures, guys, if you identify any extra events more than the ones that the client has told you, okay, then you check if the client has done proper disclosure or adjustment. If it is a non-adjusting item, it should be properly disclosed. If it's an adjusting item, it should be properly adjusted. Ask the client to do it. Got it? But that's it from the yellow period standpoint. Okay, the people who are online, if you understood the yellow period, write in the chat box yellow period procedures done. Write in the chat box yellow period procedures done. डन बच्चों, इज द येलो पीरियड क्लियर टू यू? आगे बढ़ते हैं. लेट्स गो टू द नेक्स्ट नाउ. Orange period. Very good. Now try and understand the logic. I have already given my audit report, right? I have already given my audit report on 30th June. So ideally my job is over. If I've given my audit report, then ideally my audit report is done. My job is over. So very simple. What is it? What is the first line? No obligation of the auditor. So remember, you can be very, very happy. The reason is that because there is no obligation on the part of the auditor. No more work to be done. No more work to be done. So then why are we studying if there is no more work to be done? Because 560 says, auditor, you don't go to find anything. But if the client calls you and tells you that, sir, so and so things have happened, then you can't ignore. For example, suppose a fact becomes known to the auditor. By the way, whatever will happen now after the audit report date will be termed as a fact. What will be termed as fact? Can you see this word? Will be termed as facts. Okay, bachcho? Will be termed as facts and not as will be termed as facts. Okay, not as events. Whatever was happening in the yellow period, we were calling it as event. Now we are going to call it as a fact. Okay. Suppose a fact becomes known. What is the word? Becomes known. Okay. You didn't go to find it. You came to know about it. Becomes known to the auditor. Example, 15th August 24. There was a huge fire in the factory. The client informed the auditor. The client called and informed the auditor. Now you can't ignore it. Okay. Now auditor can't ignore. He will have to check if financials require amendment, discuss with the management, and check if the management intends to, how the management intends to address the matter. Okay. These are the 3 important points you need to know. If the financials need amendment, discuss with the management. And first you check if the financial need amendment, discuss it out, discuss the scenario with the client, and ask the management how they intend to address this matter. Bacho, if the financials amendment is not required, then there is no further duty. Barabar na? Because there is no need to, let's suppose it was a very small fire. very small fire, hardly a 5,000 rupees loss happened. Take care. Then in that case, if the financials don't need amendment, then no further duty. However, if it is a huge fire and you believe that financials need amendment, basically it is a disclosure at least should go in FY 23-24 financials. Okay, remember these are those financials that are already approved. Remember, these are those financials which are already approved. Sorry, these are those financials which are already approved. These are those financials for which audit report is already issued. Okay, in those financials you believe, in those financials, that is the already approved financials, auditor believes they need amendment. So you have to ask the client, okay, to do the amendment. Now there are going to be two types of clients. One, the ones that agree to amend, the ones that do not agree to amend. Okay, now we are going to check those clients that agree to amend. We are going to check those clients that agree to amend the financials. Okay, now remember, when the client is agreeing to amend the financials, that time also guys, there can be two scenarios. Scenario number one, amendment is not restricted to subsequent events. You remember now what was the subsequent event? It was fire. It was fire, correct? So the amendment is not restricted to subsequent events means what? The client is rectifying many things. The client is rectifying many things. And दूसरा case, the other cases where the amendment is restricted to subsequent event fire. Okay, means only the fire disclosure is given, nothing else. Okay. Now, remember what will the auditor do? Guys, if the client has done many changes, of course, you will have to carry out necessary audit procedures to check those changes. You'll have to extend audit procedures and you'll have to provide an ultimately new report. Because the client has done so many changes, so you have to check all of that and you better provide a new report, right? But remember, the date of the new report should not be earlier than the date of the approval of the amended financials. These are those financials which the client has amended right now. So when the client approves the amended financials, after that you give a new report because there is no option. Okay, because the client has done so many changes, you end up checking more. Oh, don't worry, you will again get paid for this. Okay. Okay, point number two. Supposing if the client has done the minor change, only restricted to subsequent events, then I will also check only that part. Why should I check again full thing? Right? The auditor is allowed to restrict audit procedures only to subsequent events. I hope you got the logic. Now remember, auditor will have two options. Option number one, you remember the old audit report that was already given? In that old audit report, you include an additional one more para, and below that para you add additional date. Okay, and that paragraph which you have put, that date, that is restricted only to the amendment. Okay, this is called as dual dating. Means one date is already there of 30th June. Now you add one more para and below that you sign, put a new signature. Okay, new signature, new date. Okay, means that will show that this additional amendment in the audit report is only for the amendment in the financials. You have one more option. Guys, either you provide an ultimately new report, complete new report, or you in the old report you add an emphasis matter or other matter paragraph. Okay, wherein you will convey that your new procedures are only for the amendment. Are you clear? Got it? Now, supposing the client does not agree to amend. The client is saying that, sorry boss, the financials are already approved, the audit report is already there, taken, now we're not going to amend. Now check if you have issued the audit report to the client, means have you given the copy to the client. If at all the audit report is not issued to the client, if the copy is still with you, you can modify the report, because the financials actually require amendment, but the client is not ready to do the amendment and the audit report is with you. So you amend the audit report and you modify the opinion and give it to them. Supposing guys, if the audit report is issued to the client, now what are you going to do? You request the client that please don't issue such unamended financials. Please don't issue this audit report. Okay? But guys, if the client still goes ahead and issues it, then you have to seek to prevent reliance. Basically, you have to go and speak with a lawyer. Okay guys, everybody who is online, please let me know, have you understood all the procedures in the orange period? Write in the chat box, orange period procedures done. You understood what is SA 560 telling you about orange period? Okay, perfect. And the last part. Okay, green period. Okay. Again, now see. Now to the financials also are sent to all the shareholders. Supposing a fire broke out. See, what is the date when you have issued financials to shareholders? 5th September. Okay. Let's suppose somewhere on the 10th of October there is a fire. Okay. Financials have already been sent to the shareholders. Let's suppose after this 5 days, 10th September, a fire broke out in the factory. Of course, again the auditor has no obligation. Auditor in the first place never had obligation in the orange period also. So it's very obvious that in the green period also there is no obligation. But again, if the client calls him up and tells him that, sir, so and so things have happened, okay, now you can't ignore it. If you believe that the fact that you just became known to you, okay, is so vital that would have asked you to amend the audit report earlier, then in that case you can't ignore this fact. And remember, the entire chart will be same. The entire chart for orange period same applies to the green period, with only one addition. What is that one addition, guys? Pay attention. I've written the additional here. Same chart as orange period, but one addition in the procedures. If the client agrees to amend the financials, then you need to check. One more additional thing that the auditor needs to do is that he needs to check if the shareholders who had earlier received the old financials, right? On 5th September, they received old financials. So are those shareholders informed about this situation that they will now be receiving new financials? Check if all those who have been in receipt of earlier issued audited financials are informed of the situation. Ask them, check if the client has has informed the shareholders that, guys, we have just now 5 days back we sent you one financials, but there is some additional points that are still to be considered. We are amending the financials. The amended audit report new set will be released very soon. Has the client informed the shareholders about it? Rest everything is same. Are you clear, bachcho? Got it? I hope you guys have understood the entire SA 560 also. Let us now let me just mark it how many things that we did, guys, right now. Okay, bachcho, today was day 1. We completed SA. After this, I think so we completed which standard, guys? We saw, do you guys remember? We saw 501. We saw 570. We saw 560. Correct? Today that is day 1. Correct, bachcho? Tomorrow is going to be day 2. 24th November. And then maybe we have a day 3 as well. Okay? Maybe we have a day 3 as well, 25th of November. Okay? So therefore, are you clear? The time is going to be same. 4 p.m. to 8 p.m. The time is going to be same on all the 3 days, guys. Okay. Charts which are there, I'm just rename this as the targets. Okay, guys, the charts which are there of all of these 705, 706, 701, all these charts you'll get on the Telegram channel. Okay, Telegram channel, you'll find it here. The scan code is here and the name is here. Okay, you can find the Telegram channel for these charts. Okay, and I'll try tomorrow before 4 p.m. I will what all standards I'm going to be covering tomorrow. What all standards I'm going to be covering tomorrow. Okay, those standards charts also I'll release well in advance so that you will get the printout. I will try my level best, okay, to do this. But tell me, everybody who is online right now, okay, guys, I hope you guys have understood day one all the standards. I have tried my level best to cover everything in one shot. Okay, 705, 706. I'm pretty sure that if you keep watching this marathon again and again and again, okay, it will keep giving you incremental benefits. Any doubts? Please let me know if there are any doubts. Which standards do we plan to cover tomorrow? Most probably we'll be covering okay, beta. So tomorrow's day will be dedicated to completing what? Completing all the essay 500 standards. Okay. So that our 700 series and 500 series gets done in 2 days. And after that we can go to the $200 series, right? The simple one. Essay 200 हो गया, essay 210 हो गया, 220 plus SQC1 हो गया, then essay 230 हो गया, essay 260 हो गया, essay 265 हो गया, essay 299 हो गया. ठीक है. After that we will have essay 315, essay 330, 320. Got it? Okay, Acho. Understood. So we'll try our level best that tomorrow we complete this. These are the targets for the next 2 days. Okay, but I hope you guys enjoyed the today's session. I hope आप सबको मजा आया. In case if you want, you can take the screenshot of this as well. ठीक है. Thank you so much, guys, for joining. I will see you tomorrow. Bye bye. Take care.